urgency of getting to one Bitcoin, because I think that people are going to completely miss this idea, this meme that I'm trying to create, which is get to one Bitcoin. I'm going to smoke a cigar while we talk about it. Get to one Bitcoin is extremely important, not because the number one has a significance to it, although it does, but that's not really the reason. But getting to one Bitcoin is extremely important. Beautiful cigar. The getting to one Bitcoin is extremely important because of the rarity of the asset and the time that we have right now to secure the hardest, toughest asset on earth. The getting to one Bitcoin is important because there are 55 million millionaires in the world, and there are only 21 million Bitcoin. The getting to one Bitcoin is important because Bitcoin is currently 27, 25, 28, $29,000, and it won't be there for long. You have a certain moment in history to actually secure your one Bitcoin. I believe the way that Bitcoin works is that it prices out people. So far we have priced out worldwide low class. We have priced out, pretty much the Eastern or the third world middle class. Now we're pricing out the Western middle class, because $30,000 to put into an asset for a Western middle class person is not easy. It is not an easy thing to do. I'm going to move this ashtray over here. It's not an easy thing to do. It is very, very difficult, and it will prove to become more and more difficult. So getting to one Bitcoin is extremely important, because next cycle, I believe we price out Western or worldwide low single-digit millionaires. And then in the next cycle after that, we price out, if we say, I don't know, $7 to $20 million range. Because think about it, when I say we're going to price them out, what I'm talking about is this. If you're worth $2 million and you've got that $2 million in property, and Bitcoin is $300,000 a Bitcoin, it is really tough to actually liquidate that much money out of your property portfolio or your equity portfolio because of taxes and all this other stuff. It's really tough to liquidate that in order to purchase a Bitcoin. It's just tough. Whereas when Bitcoin is $700,000 a coin, someone worth $7 million, you now got to liquidate 700 grand to put into an asset that you don't know much about, because you didn't spend the time doing the research, getting the knowledge, actually understanding what it is, understanding why scarcity is the most important thing of any asset on earth. You're screwed. You're not going to do it. You're not going to do it. It takes time, right? It takes time. As bullish as I am, it took me from March to November to fully sell down my gold position in 2020. It took me until then to really build up my Bitcoin position, because I was still learning. I got it, right? Because of 16, 17 years at that point of experience in markets and investments, but it still took me that amount of time to understand Bitcoin. Sure, I got it, but the understanding, the conviction building takes time. And most people are not allowing themselves the time to do that. They're basically trying to say, right, what I'll do is it will just click one day and I'll get into it, and that'll be it. And if I need to get into it, I'll get into it. And it just doesn't work like that. You have to actually understand it. Now, the good news is that most people in the world are silly enough to loan their right to have a conviction to other people, and these people are called asset managers. So they trust someone else's conviction. And the beautiful thing about what's going on in Bitcoin is you're going to have 500 to 1,000 people in the world make all the decisions for $100 trillion of capital coming up soon. So, and the beautiful thing about that is that they have teams of hundreds of people around them that are going to spend all day, all night, all weekend, everything figuring out this asset, and they will understand it because they understand true scarcity. If BlackRock didn't understand true scarcity, they would not have bought up farmland or forest land rather when they started promoting ESG. If they didn't understand scarcity, they wouldn't be buying up single-family homes. They understand scarcity. It's about to be applied to Bitcoin. So then you ask someone like, why haven't you got to 1 Bitcoin yet? And by the way, there's so many people that are struggling, working hard every single day, earning a living to get to 1 Bitcoin. I want to applaud every single one of you because that's extremely important. That's what you need to do for your life, right? We all have different journeys in life at the end of the day. And my journey has been very, very different to someone else's journey. But ultimately, our goal is to exchange our physical labor for financial currency, energy, right? We exchange our physical energy, which is our labor, for our financial energy, which is our currency. And then our job is to maintain the value of that energy into the future so we can spend it at a later date. That's the goal of every human being on earth. I don't care whether you are a multi-billionaire or whether you are on the street and homeless. That's the goal. So if that's the goal, then you need to understand that every single person is going to be chasing Bitcoin. Because if that is the goal for every single person, then they will be seeking the hardest asset on earth at some point. Might not be straight away, might not be this year, might not be in 5 years, might not be in 10 years. But they will be seeking the hardest asset on earth. How do we know that? Because humanity always has. There is a reason why real estate is a $330 trillion market, whereas the stock markets worldwide are, let's say just shy of 200 trillion. Because real estate is a harder asset than the stock market. And there's a reason why gold's market cap is 13 trillion compared to everything else, because these other assets are harder than gold. Humanity, somehow, some way, we have taken our ability to perceive hardness of an asset and actually allocate our savings and wealth into it. We know that if we get into real estate, it's going to be a lot more stable than if we get into the stock market. We know that if we get into the stock market, it's going to be a lot more profitable than if we get into gold. How do we know these things, right? This is human instinct and human nature, and Bitcoin is coming to take advantage of that, because human instinct and human nature, I don't care how long they print money and tell you that right is left and left is right. I don't care what they do. At some point, human instinct takes over. The fiat system is basically designed to print enough money to tell you that your human instinct is wrong. That's what it is, and it doesn't last forever. It doesn't last forever. We've got people waking up all over the place, right? We got people who went left because they were told to go left, figuring out, oh no, maybe I shouldn't have done that. They're coming back to the right. We got people who were told, the best thing that will make you happy is go grab a job and work for the rest of your life, even though it goes against your biology. Figuring out that maybe this isn't the thing that's going to make me happy, and the fact that 50% of my peers in this cohort are on antidepressant drugs isn't a good thing, and they're coming back. You cannot print money for long enough to keep humanity away from its natural instinct. It's not going to happen. It will bounce back, and the clapback will be harder than how far you try to push it, because the clapback is always quicker. The clapback, while if it took 40 years to go one way, it's going to take 5 to 10 years to come back the other way. And the clapback will be tough. And the clapback will be tough because rebalancing is tough. And that's what Bitcoin is to the fiat system. The fiat system is designed to tell you to go against your human instinct. It's designed to tell you that the labor that you have, that you converted into financial currency or monetary energy, is not valuable. Therefore, you should spend it. It's here to tell you that whatever impulse you have to buy and spend, you should take it. That's not natural human instinct. We have been scouring the earth and accumulating resources for use by future generations since the dawn of humanity. You don't think that that is inside every cell of every human being, of every DNA strand of every human being? That is the human spirit. And that's what Bitcoin speaks to. Bitcoin speaks to the human spirit that is inside every single one of us, the desire to have a better future. And fiat doesn't. And when people realize that not only does fiat not do that, but real estate doesn't do that, the stock market doesn't do that, gold doesn't do that, because the supply levers can be controlled on those assets. When people finally realize that, the clapback to the fiat system is going to be so hard and so heavy. Why do you think BlackRock is getting involved at this point? Remember, while BlackRock, yes, absolutely is tied in with the fiat system and tied in with the US dollar, they are a business. And if the US dollar is going down and is going to be replaced at some point with something else, they want to be at the forefront of that. They are a business, right? They are a business. The US dollar and BlackRock are completely separate. While they might be incentivized right now to work together, they are completely separate. One is a business, the other is a government currency. And so if I can get close to the government currency to profit, that's what I'm going to do. And then if it changes and I need to get close to Bitcoin, that's what I'm going to do, because I'm a business. Their job is to generate profits for its shareholders. And if the only way they can do that is by getting close to the asset of choice, then that's what they will do. That's why I can trust human beings and corporations on the incentives that we create. And we have created an incentive for these institutions and for these people to move towards Bitcoin. Well, firstly, the first incentive as far as the US dollar goes is that Bitcoin will actually help the US dollar expand. Because if this value gets pumped into Bitcoin, the value per Bitcoin goes up, people start borrowing against that, they can take that credit, put it into their bank account, and the banks can now lend out 20-1 against it. So there is a huge advantage in the midterm for banks to get involved and start allowing Bitcoin custody and Bitcoin products and service products, borrowing products, lending products. They will be working it out. If you don't think that BlackRock has a team of a minimum of 20 people right now working to figure out how do we lend against Bitcoin one way or the other, what's the best way for it, you're a moron. You're $1,000 net worth, or you're a conspiracy theorist, you're a moron. If you think BlackRock is stupider than you, you're a moron. This is no way to say it. BlackRock is way smarter than me. BlackRock is way smarter than you, and BlackRock is way smarter than every single person on Twitter. Why? Because power moves in silence. And that's what BlackRock has been doing. We just seen internal studies of BlackRock coming out saying that, the best allocation from a risk-reward perspective is 84-point-something% in Bitcoin. What are we talking about here? You think these are just studies that are just like unsanctioned studies that are written up like that literally have a marking on top of them saying this is only for private client and internal use only, this is not for public posting, and it's being leaked? What are we talking about here? And in the face of all of that, you don't want to get to 1 Bitcoin. There are people out here saying they don't need to get to 1 Bitcoin. They don't need to rush. They don't need to get into one. They don't need to find their way to 1 Bitcoin. And I want to tell you that you got one chance in human history. That's the rarity of this asset. That is the rarity of this asset. You got one chance in human history. No matter how many people are born in the future, no matter how many people die, no matter how much wealth is passed down to future generations, you have one chance in human history to get to 1 Bitcoin. because there's 8 billion people, whatever it is, on the earth, 9 billion people on the earth. There are 55 million millionaires on this planet, and there is only 21 million Bitcoin. No matter how many people are born, if we manage to turn around the population crisis that we're going to have with the amount of the lack of babies being born, if we manage to turn that around, then great. They will still be in a world where there is only 21 million Bitcoin. And I have, by the way, I have a few of them. So, you know, I've got a couple people's worth. So it's like, at that point, what do you, if there is an army of people that is buying up Bitcoin, the HODL rate keeps going up. What I mean by the HODL rate is how many people just hold their Bitcoin no matter what the hell happens to the price. Right? The price is set at the margins. The price is set at the margins of the supply, not the total supply. So you have to be very, very careful at that. The price, and this is why I'm going to do another video on Bank of America's bull market multiple. So if you haven't subscribed to the channel, please subscribe, because I'm going to be doing another video on that coming soon, because it's very, very important to understand how capital coming into a market affects the price of an asset. So you have to get to 1 Bitcoin. The incentives are aligning too well here. We are about to price out low single-digit millionaires in the West, or worldwide actually, because millionaires are worldwide, right? We're about to price out low single-digit millionaires in the next upcoming 2024 cycle. After that, in the 2028 cycle, we'll price out people between $7 and $20 to $30 million. And then after that, we'll price out the ultra-high net worth, right? Ultra-high net worth, I believe, is something like $36 million of net worth. And once that gets priced out, and what I mean by priced out is these people can't afford to buy 1 Bitcoin. That's what I mean. So, and I'm not talking about price movements. I'm not talking about what might happen after it hits a certain peak, etc., etc. Yeah, there's ebbs and flows and everything, especially as an asset is maturing. But we're getting to a point where with an ETF coming, it changes the game. It changes the game completely, because with an ETF coming, you have the ability from anywhere in the world, in a wrapper, in a environment that you feel completely comfortable with, to get to 1 Bitcoin with a click of a button. You can sell out of your Tesla stock and get into 1 Bitcoin in 2 seconds, and you can start sucking value out of the stock market. This is huge for Bitcoin. The Bitcoin ETF is the single most important moment for Bitcoin adoption since Bitcoin itself. That's my opinion. So I think that we need to do better at helping people understand why they need to get to 1 Bitcoin. So I'm always going to be saying that, get to 1 Bitcoin, get to 1 Bitcoin, get to 1 Bitcoin. And of course, I understand that if you live in a third world country, maybe it's not 1 Bitcoin, it's something else. But the 1 Bitcoin is important. And by the way, the next cycle, it will probably change. It'll probably change because most people won't be able to afford 1 Bitcoin. I'm talking about, when I say most people, I'm talking about single-digit millionaires. I'm talking about people with $300,000 not being able to afford to buy 1 Bitcoin because you've got your assets tied up. What are you going to do? Sell a quarter of a house to get into 1 Bitcoin? You're not going to do that. You're not going to do that. You can't do that, right? You got debt on the house. You got all this other stuff. So, yeah, we're about to enter a very, very weird territory when it comes to the price of Bitcoin and who it's going to price out. But as the price goes up, the demand will go up. So you might be getting to 0.5 Bitcoin. And ultimately, the only thing that matters is how much of the Bitcoin network do you own? But getting to 1 Bitcoin is extremely, extremely important. There's a lot of people that want me to reevaluate 1 Bitcoin, whether it should be 0.5 Bitcoin or whether it should be whatever. I won't be doing that. you have to get to 1 Bitcoin. It should be, if you are someone who's been living in the West for the last bear market and you have not gotten to 1 Bitcoin, you will kick yourself in the next 40 years. It's just as simple as that. You will kick yourself. There's been many opportunities with the Bitcoin price at 25 to 30,000 to get to 1 Bitcoin in the last bear market. If you have not done that, your progeny will hate you and you will kick yourself. Maybe not hate you, that's a bit too much. Your progeny will be disappointed in you, right? Everyone worries about legacy, right? Really the thing you need to worry about is your progeny. Your progeny is more important because it is the future. And if the future is built on Bitcoin and you don't own enough, how will your progeny be able to compete in a world where there are people who own more Bitcoin and will be able to outcompete them because of they'll be able to influence the way that the direction of the market goes because they own more Bitcoin. Your progeny needs something to build on, right? The people that are successful today are the ones who had a property portfolio, the ones who had a stock portfolio to lean on to create the things that they wanted to create. That is what Bitcoin is today, and you need to get to 1 Bitcoin. And this, whether you get to 1 Bitcoin or not, which I think you should get to 1 Bitcoin, there are only 3 rules to Bitcoin, and that is step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy. There is $17.7 trillion of asset managers at a minimum, at the very, 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 very tip of it, coming for your Bitcoin. And in this video, we're going to talk about why you must protect it, why you must protect it at all costs. What a lot of people don't realize, and by the way, if you haven't subscribed, please subscribe, because the faster you subscribe, the faster the message gets to the people that need to hear it the most. And if these videos have provided any value to you, the number one thing you can do for me is subscribe to the YouTube channel, follow me on Twitter, and that will help the algorithm understand that this Bitcoin information actually needs to get out to people. So let's go through the list very quickly of asset managers that have active filed Bitcoin spot ETF applications. You got BlackRock, $10 trillion AUM. AUM stands for assets under management. How much money do they control? How much money can they direct? Right? $10 trillion at BlackRock. Fidelity, $4.5 trillion. Franklin Templeton, $1.5 trillion. Invesco, $1.5 trillion. Wisdom Tree, $87 billion. VanEck, $61 billion. Global X, $40 billion. ARK, $14 billion. Bitwise, $1 billion. And Valkyrie, $1 billion. That's a total of $17.7 trillion of asset managers that have got active Bitcoin ETF applications, and of course the granddaddy of them all being BlackRock. So if 5% of these assets find their way into Bitcoin over the next decade, let's just say they set up a fund, Bitcoin's compounding at 80% CAGR, you know, one of these has promoted an investment idea that is something to do with the environment, and it's only generated a CAGR of 5.5 to 6% over the last 10 years, hasn't even beaten out inflation. And now they have the opportunity to actually get their clients, because Bitcoin is, of course, now environmentally friendly. I don't know whether you knew that or not, but 2 weeks after the ETF application came through from BlackRock, KPMG put out a report saying Bitcoin is now environmentally good. And just yesterday, in fact, a Bloomberg intelligence report came out saying Bitcoin's shifting its narrative for the environment. So it's funny how that works. And if anyone's been following me for a while, you know exactly, I said that exactly thing would happen. The only one I'm waiting for is a major publication like New York Times, something like that, doing an op-ed on how environmentally friendly Bitcoin is. So imagine you've got an asset, right? And you've been pushing an investment opportunity, right? Something to do with the environment, something to do with social, and something to do with governance, right? Some bullshit called ESG to all of your clients around the world, and they have generated a 5.5 to 6% compounded annual growth rate. They're completely annoyed with you, but they're doing it because if they don't do it, you're gonna spank them because you are BlackRock. So let's take that and now plug Bitcoin into it, which is compounding at 80% a year, and I can boost those 5.5 to 6% ESG numbers up to I don't know, let's say 14, 15, 16%, at least beat inflation and make myself look good, etc., etc. I think 5% of the total AUM just on these applicants will find its way into Bitcoin over the next decade, right? 5%. This is not including the other funds in the world. This is not including the funds that these people influence. This is just their AUMs, right? Based on the Bank of America bull market multiple, if you haven't understood that, go back and watch literally the previous video that I put out, and you can understand how that bull market multiple works. It could mean an $850 billion injection into the Bitcoin markets. $850 billion of injection of cash coming into the markets. And based on the bull market multiple, that would increase the market cap of Bitcoin because of the finality of supply to $100.3 trillion. Or that would equal a $4.8 million per Bitcoin price. Think about that. Just 5% of the current applicants' assets under management going into Bitcoin equals a $4.8 million per Bitcoin price. It's absolutely crazy. And the reason for this to happen is because Bitcoin has finality of scarcity. There is an absolute final amount of Bitcoin in the world. And again, as I've said, as the price goes up, the hodl rate will increase. People think as the price goes up, more sellers are going to flood into the market. That may happen during a transitionary period. But as the price goes up, I'm more incentivized to hold. As a sophisticated holder, as a sophisticated investor, I'm much more incentivized to hold my assets as they go up than I am to sell the assets. That's one of the things that we don't like about the current financial system, because people are incentivized to just hoard the assets. What do you think is going to happen to Bitcoin? It's going to be different for Bitcoin, even though it hasn't been different for real estate, stocks, gold, everything else. As soon as the price starts moving up, we're going to start hoarding this asset even harder than we were, because the tax incentives are aligned to hoard it rather than sell it. So this is a very, very precarious time for the average person, because right now you think that all of these people coming in, you know how many people I know that say I'm going to get into Bitcoin once an ETF is approved? You're just being stupid, because if you want to take advantage of an opportunity, you need to actually take advantage of the opportunity. The opportunity is between now and an ETF. That's the opportunity. Will Bitcoin always be a good opportunity to buy Bitcoin? Sure, because of the finality of scarcity. But between now and when that ETF starts to get subscribed, is the opportunity for the person who has foresight. Is the opportunity for the person who's willing to do the work and learn and understand what Bitcoin is and why it's important and why scarcity is valuable. Because these people are going to come for your Bitcoin, and they will pay you $1 million for it and be happy with that. Because it is the one thing that humanity has ever created that actually has an end point. Everything else continues. Life is only valuable because life has an end point. If life didn't have an end point, we would be going even more off the rails than we are. You think TikTok would be around if people knew that they were truly going to die one day and they had to do something special? Someone was expecting them to do something special? You think that would happen? Do you think there'd be people out here not having children, not wanting to have children, if they understood that life is special? There is a pressure for you to do something with your life, and you got one shot. Right? People will be having babies. They would be like, if people truly understood what scarcity means, the world would be a lot better, because they would understand that I can't waste my time on TikTok. I can't waste my time chasing meaningless things. In the end, I need to chase what my biology wants me to chase. And the world gets better when you have finality of scarcity. And that's what Bitcoin is bringing back. It's bringing back the education, the knowledge of finality of scarcity. Now, you're either going to learn in advance and you're going to understand what scarcity is, or you're going to learn when scarcity hits you in the face and you never ever have another opportunity to get to one Bitcoin ever again. There's two ways. With scarcity, there's two ways. You can't just print money and give people the illusion that they've managed to get to one Bitcoin. It doesn't work like that. It doesn't work like that. I know there's a lot of young people. You know, I did the Bitcoin for Millennials podcast with Bram, and I said boomers are going to kick millennials' asses when it comes to hodling Bitcoin because boomers understand. Millennials don't understand why it's important to hodl an asset, right? They're doing it because it is perceived as a trade. Whereas I want you to start thinking about how would Rockefeller and Rothschild think about this asset. You know, I was looking at I was doing some research, or I was having a debate with a woman, and she said, you know, that she only wants to have one child. And I said, that just doesn't feel right. Like, I don't know, it just doesn't feel right to me. So I decided to have a look at, like, what is the optimum number of children that these wealthy families have had. And from what I can see, it looks like the number is somewhere between 3 and 5, right? For some it's a lot more, for some it's a lot less, but it's optimal numbers like 3 and 5. And one of the reasons for that is it's very simple, because when you have an army like that and you understand that children are important, you can actually build that army to follow the vision that you have set. You actually get to set a vision, right? I don't even understand the people who don't have children and want to buy Bitcoin, because at some point you're going to sell it, right? At some point you're going to sell it, or unless, you know, there's the very rare cases where people will set up foundations and things like that to support the world in the way that they want to support it. And that's beautiful. But, you know, the way most wealth and most importance and most influence and most power to a certain extent has been taken in the world is through having children, organizing the exact same vision, and executing in a way where, like, for example, right, the Rothschilds took over the banking because he had 5 sons, and he put 5 sons in 5 different banking jurisdictions in Europe, and each son ran a division of that, and they had this banking empire, right? And that's really what it takes. One person to have a vision, and it takes one person to have a vision and execute. And that could lead to something more beautiful than you can ever imagine. And so that's how I want you to start thinking about Bitcoin, because this is the scarcest. Rothschild, Rockefeller, etc., etc., they did all of this with assets that were not truly scarce. They were just hard to get out the ground. Imagine you do this with an asset that's actually hard, that's actually finite, that actually runs out at some point. So it's important to start thinking about these things. And then you wonder, you know, there's $17.7 trillion trying to come after your Bitcoin. Why is that? Because they understand this. They understand that the scarcer the asset, the better it is, right? So they want to own it. They want to control it. They want to generate the yield of what comes in the future based on this asset. And they're not coming for this going, you know, I'm only going to take a small portion of this market. They're coming for everything. They're coming for your Bitcoin. They're coming for the mining stocks. They'll be, you know, how it works if you want to generate the highest returns on a particular opportunity is you look at like second, third layer opportunities on top of it, right? It's like when you go through the $5 million Bitcoin training that I put out for free, you see how I organize my portfolio. I'm looking at second, third layer opportunities on top of Bitcoin, and these guys are much better at it than I am, right? They're much better at it than I am, because what they'll have is a team of 50 people looking at all of the ancillary opportunities around Bitcoin. So if there's gonna be a huge surge in energy demand, for example, just an example, then I want to position myself in these specific energy opportunities as an ancillary to Bitcoin. If there's going to be an opportunity with, I don't know, electric vehicles in Bitcoin, then I want to take a slice of that too. So they're coming for the whole damn chessboard, and you're sitting here going, oh, you know, maybe I should get to 1 Bitcoin, maybe I shouldn't get to 1 Bitcoin. I keep listening to this crazy guy on YouTube named British Hodl talking about getting to 1 Bitcoin. Maybe it's true, maybe it's not. These guys are doing it right now. They're doing it right now. And here's the beautiful thing about it. I get to care enough to create these videos, to talk to you about it, because what else am I going to do? What else am I going to do, right? I took the steps. I got secured. Everyone in my family is good. Everyone I care about is good. So
what am I going to do now while these guys are chomping at the bit, coming after your Bitcoin, trying to tell you to sell it for $1 million? That's what's going to happen. If you don't think that BlackRock is going to happily offer you $1 million for your Bitcoin just to take it off your hands, just to take it. It's $1 million just to take it, right? There's a little bit of primalness going on here, right? When it comes to the scarcity of an asset, they will pay you $1 million just to take your Bitcoin. And they won't even think twice. And you'll be happy all out here buying a shitty little house in some third world country and figuring out how to live there, thinking that you're happy because you sold Bitcoin for $1 million and you held it since $10,000. And they will go and they will take that $1 million of Bitcoin and they will turn it into a multi-$100 trillion opportunity, and you'll be sitting there wondering what the fuck just happened. That's how aggressive these guys are. They don't play. They don't mess around. They're coming for your Bitcoin, and there's $17.7 trillion here. This is assuming, by the way, that no more money is printed. This is assuming that no other funds follow them into into Bitcoin. This is assuming that no other corporations get into Bitcoin. This is assuming that no countries get into Bitcoin. This is assuming just this $17.7 trillion and 5% of it goes into Bitcoin. This is the single most important opportunity anyone has ever come across. And you have been blessed if you've been watching my videos, if you've been watching the other great Bitcoin content that's out there. Support everyone. If you've been watching this and you've been given a glimpse into what this opportunity is and you haven't taken advantage of it, you must do the work. At least if you do the work and then say no, you can say you at least tried. You can say you at least understood it, and you can say that this is not for me. Don't tell me that this is not for you, that you don't need to get to one Bitcoin, Bitcoin sucks, etc., when you haven't done the work, and I can ask you a simple question and demonstrate that you haven't done the work. This is a once in a species opportunity. Jesse has a really good statement. Once in a species opportunity. And I think you owe it more respect than you're giving it. Because true finality of scarcity is what humanity is always about. It's about scarcity. Scarcity is the ultimate asset. You have one life, and you've now got one chance to get as much Bitcoin as you can. And despite you only having one life to do it, there are still only 3 rules to Bitcoin. It's step number 1, you buy Bitcoin. Step number 2, you shut the fuck up. And step number 3, you get fabulously wealthy. Good morning. I just got in from my morning walk, and something I was thinking about on my morning walk that I want to speak about is Bitcoin bears right now. This is going to be my opinion on if you are bearish right now in Bitcoin, how brain dead you must be. So we're about to body slam the bears in this video, and I want you to make sure that you do one thing, which is subscribe, please, because as you subscribe, the algorithm realizes that more people need to hear this message, and the one contribution that you can make beyond anything to help me spread this message and body slam some bears is to subscribe. So please do subscribe. Now, let's talk about being bearish and what it means, and what I was taught as a young man coming up in the investing space about how you should actually position yourself bearish. Because what I see in the Bitcoin space and in the crypto Twitter space and all these Twitter nerds is everyone, $1,000 net worthers, the $10 a month DCA gang, everyone, is that they want to be bearish. They just want to tweet bearish. That's not actually being bearish, right? So they'll come out with this stuff like, I'm in cash right now, so therefore I'm bearish. I'm waiting to see what happens in the market, therefore I'm bearish. There is only 3 positions in the market. One is bullish, the other one is bearish, and the third one is neutral. And what people have done to try and make themselves look smart is because they don't have what it takes to take a position, they have led everyone to believe that holding cash is a position of bearishness. The only true position of bearishness is shorting Bitcoin. And today, If you have been shorting Bitcoin, you've been getting wrecked. So what I want you to do from here on out is anyone who presents themselves as bearish on Bitcoin, I want you to hold their feet to the fire, and I want you to ask for evidence of a short position. I have long positions. I'm not afraid to say it. I'm not afraid to communicate it. I'm not afraid to do this. Imagine if I said to you, I think Bitcoin's going to go up to $200,000 a coin, and I'm sitting in cash. Right? Sounds stupid. So if someone's saying to you, I think Bitcoin's going to go down to $5,000 a coin, and they're sitting in cash, it should sound stupid to you. But because of everyone's inherent need to feel safe and part of something, you're allowing those people to have the bandwidth to say that they're bearish without holding them accountable for their bearish ways. These people are not bearish, they're shit scared. And that's okay. I've had many times in the market where I'm shit scared. And the mentors of mine have had to tell me, you don't have a position, you don't deserve an opinion. Don't talk to me about how bearish you are. Show me your portfolio. Show me, that's a Nassim Taleb quote. Show me your portfolio. Show me that you are, show me what you think based on your position. Anyone who tells you that they're in cash and that means they're bearish is just shit scared. That's it. There's nothing else to it, right? They're shit scared. And again, I will reiterate, being shit scared is okay, right? Because especially with an asset like this, which has a compound annual growth rate of 70 to 80%, it's okay to be shit scared. But don't present yourself as an intelligent bear by tweeting out that you're bearish, right? Prove it that you're bearish. Otherwise, you don't deserve an opinion, right? In my world, and again, this is a new world, right? So I came up where my mentors, if they saw me doing something bad, I would get a sit down talking to. That's the world I came up with, right? If nowadays, if you do something bad, you basically get on social media and build an echo chamber about how great what you're doing is. That's not the world I came from, right? There was times where I was wasting so much fucking money. When I first started making money, I was only 16, 17 years old. I started wasting money, taking trips to Monaco from London, pouring just way too much champagne, way too much everything. It's completely stupid. And I had talkings to by men that were much further ahead than me, much older than me, much more wiser than me, telling me to fix up. And that doesn't happen anymore. And one of those moments was I had an opinion about something going on in the economy and the markets and this, that, and the other. And one of my mentors listened to me talk and then turned around and said, your opinion is irrelevant. And I said, what the hell do you mean? Why is my opinion irrelevant? He goes, because you don't have a position in the markets to take advantage of that. So if you truly think and you are truly convicted on the fact that that is going to happen, where is your position? You don't have a position in the markets. You're just shit scared. And that stuck with me forever. So for me, if someone asks me about shitcoins, for example, I can tell you why I love Bitcoin again, but I'm not going to tell you about why that particular shit, I'm not going to delve into why that particular shitcoin is not of interest to me, because I don't have a bearish position on it, right? I'll just tell you why I'm more bullish on Bitcoin and why I have a bullish position on Bitcoin. So the bears right now are shit scared. These are the newsletter readers. These are the people that allow, companies that want to make money selling newsletters to doom and gloom boomers survive. These are these people. They're the $1,000 net worthers and the people who do not have conviction to place a position in the market to back up their thesis. They believe that a neutral position, which is cash, is a bearish position. That's the lie that you get told. That is the lie that you get told. A cash position is neutral. It is not bearish. It is not bullish. It is I don't know what the hell is happening. That's better, right? So if a bear comes out and says, I don't know what's happening, I think Bitcoin may go down or it may go up, but the basis is I don't know what's happening, therefore I'm willing to sit in cash while I wait to figure out what's going on. That's a completely different conversation to, we're going down to $12,000. Show me your fucking short position. Until then, shut up. It's just simple as that. So I want you to start holding their feet to the fire, because we hold the feet to the fire of the bulls. So why can't we hold the bears' feet to the fire as well? At the end of the day, they would not dare short Bitcoin. That's the reality, right? You've got Bitcoin evaporating from exchanges. You've got an ETF coming for approval at any moment. You've got 1.8 million Bitcoin available on exchanges. You've got the DCA army growing stronger and stronger. You've got Bitcoin adoption spreading all around the world. You've got so many bullish tendencies for Bitcoin right now. You've got the ECB saying they're done with interest rate hikes. You've got the Bank of England saying maybe one more and that's about it. You've got the Federal Reserve coming in and saying, well, I think we probably need to pause. You've got higher than ever probabilities that this Wednesday they're going to pause on interest rates. You've got the credit cycles changing. You've got the supply dynamics changing. You've got the halving coming. You've got all these things coming. You've got the ETF coming. You've got all these things coming. So the bears wouldn't fucking dare place a short position. They're doing it to farm engagement. That's all it is. And in the meantime, what happens is some people listen to that BS and they get bearish. By the way, most of these bears are short-term bears. They'll say it themselves. I'm a long-term bull. Same as me. I don't know what's going to happen short-term to Bitcoin. I'm holding for 10 years minimum, right? Ideally forever. But I'm holding for 10 years minimum. And these bears don't know what's going to happen in that 10 years. Most of them are humble enough to say, I think it's going to go up in 10 years, right? If it's going to go up in 10 years, bears, and in the short term you're saying you're being bearish on Bitcoin, then what you're basically saying is that I'm trying to trade this asset. And if you're trying to trade this asset, then you don't understand this asset. If you're trying to trade the hardest asset humanity has ever created with true finality and scarcity, you do not understand this asset. Basically, what I'm saying is any bear on Bitcoin doesn't truly understand the long-term potential of this asset unless, and I will put a caveat on that, unless they are a trader and they are short-term, they verbalize, I'm short-term bearish and here is my short position that I've executed in the market. Those are the only bears that I respect. The people who have short-term actual bearish positions in the market. I have friends that have short-term Bitcoin bearish positions in the market. They've shorted Bitcoin because they believe that Bitcoin's going to go down, right? That I can respect. I cannot respect Twitter and YouTube bears that are out here telling everyone that the market's going to crash, everything's going to collapse, the doom and gloom boomers, the $1,000 net worthers, the $10 a month DCA gang that is sitting out here with long positions or cash. I don't respect cash. And I don't think you should either. In my world, with the people that allowed me to become who I am, cash is a bitch position. I don't know if I can say that or not, but cash is a weak position, right? Cash is a weak position. Cash is a lot of people say cash is a strong position. It's strong if you have a plan. If you just don't know what's going on, which is why most retail sits in cash, they're like, I don't know what the hell's going on, right? That's a weak position. And this applies to everything. This applies to real estate, this applies to stocks, this applies to everything. This is not just Bitcoin related. But the Bitcoin bears seem to get more and more famous by being bearish on an asset that their portfolio is actually long on. But they're out here tweeting like nerds about how bearish they are. Don't do that. Like you're ruining people's chances because people are listening to you and thinking that they don't need to get into this asset because people will extrapolate your short-term bearishness for long-term bearishness. And it's not responsible. We need to get people to one Bitcoin. And they can't. Like my parents, the amount of videos my parents send me about short-term bearish news on Bitcoin, it's unbelievable. And that's what we're fighting against. That's what I am trying to fight against. Because those morons, and I know most of them that are on Twitter, have long-term Bitcoin positions. And yet they're coming out saying, I'm short-term bearish, oh my God, the market's gonna go up, putting up fucking, trading view pictures, trying to draw charts and shit. Don't do that. Because this is more important than you gaining a bunch of followers. It's more important to be bullish. Even if I was short-term bearish on Bitcoin, I would never say it. I would never say it. I have a long-term position on Bitcoin. It is bullish as fuck. It is significantly overweighted in my portfolio, and that's where I'm staying for 10 years. I'm not selling it. If the market goes down, it goes down. I'm here for the ride. Not selling it. I've not sold it. I've not sold a single Satoshi since I started buying. So you have to hold people accountable for the shit that's coming out of their mouth and what they're tweeting. These bears, I want to see short positions. Let's make it a standard now. The question that you immediately ask, and by the way, we're smart enough, right? We're smart enough. We can tell. You don't even need to ask them for evidence of their short position, right? Because I understand some people don't want to share their short positions. You just got to ask the question. You just got to ask the question, and you got to pay attention. So next time you come across one of these bears that is bearish on Bitcoin while we have this lowest amount of exchange supply, an ETF incoming, 75% chance 23, 95% chance in 2024. You've got adoption growing. You've got Bitcoin being recognized by all of the institutions around the world, filing for Bitcoin ETFs and understanding that their clients want exposure. You got adoption growing amongst people because they realize that this system is screwed. You got all of that happening. And this person's out here talking about how bearish they are. I just want you to ask them, hey, whatever your name is, do you have an active short position against Bitcoin? That's it. And if they do, if they say they do, believe them. If they say they don't, believe them. Because that's all we can do at this point. But it's time to start holding people's feet to the fire. And before you turn around and start believing anything that they say, I want you to find out what their portfolio says. Because regardless of what human beings say, regardless of what comes out of our mouths, it's very, very important to know what our portfolio is saying, because the portfolio is the real conversation piece, not what's coming out of their mouth. This is why I hate Bitcoin bears, because all of them are bullish long-term on Bitcoin. And they don't understand the damage that they're doing. And that's what I was thinking about on my walk. And that's why I wanted to share this. And I think it's very, very important to start holding the bears' feet to the fire. And I guarantee you, most of them do not have an active short position against the market, because you got to be a moron to short Bitcoin at this point. You got to be an absolute moron. So, point of this video is to tell you, stop getting distracted by people who have bearish tweets and bearish videos on YouTube. They're not important, because despite all of their bearish news, the $1,000 net worthers, the $10 a month DCA gang, and the doom and gloom boomers, despite all that, there are still only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy. So, god damn, that's hot. So, I was sitting here thinking about what BlackRock's goal with Bitcoin is, and why they would suddenly start putting all this effort into getting a Bitcoin ETF approved and putting in all this effort for marketing. Larry Fink's out there talking about Bitcoin on CNBC, etc., etc., and the wheels are starting to turn, and all these things are starting to happen. Like, why would, what is the end goal for BlackRock when it comes to Bitcoin? And I wanted to just cover, the direction that I think BlackRock will take in this market, and give you my prediction on how I think BlackRock and the institutions are going to dominate this industry. So this is really for people who are sitting here worried about whether they should get into Bitcoin, worried about whether they, while you're sitting here thinking about whether you should get into Bitcoin, BlackRock is out here accumulating all the Bitcoin and planning to accumulate and control the whole industry. We're not the same. We're not the same. You are not the same as BlackRock. BlackRock is very strategic. BlackRock is not going to come out here willy-nilly and
just decide, okay, I'm gonna go place a market order at at 10 a.m. It doesn't work like that. They're gonna be very, very strategic, and they're very, very professional at acquiring assets. When the ESG thing happened, there was one firm that owned a bunch of forest land that could sell carbon credits, right? BlackRock. Surprise, surprise. So, and the other thing is that the ESG overall, when you look at the returns that ESG has generated, while it might be portrayed as a really good thing for the environment and everything else, it has not generated two positive returns. I mean, it's below inflation levels or below real inflation levels of returns. And so their investors are looking at them going, what the hell doesn't make sense? Like my return has been so low. So what's the solution? BlackRock has a couple different things that they can do. Number one solution, which is what I think is happening right now, is you figure out how to take the best performing asset known to mankind and you make that ESG friendly, quote unquote ESG friendly. And when you do that, you can now put that asset into the bucket of ESG, and then over the next decade, your ESG bucket now looks like it's giving you, 20% a year returns, whereas before it's giving you 5% a year returns. So now the idea of ESG pays off, Bitcoin pays off, everyone's happy, the clients are happy, BlackRock's happy, BlackRock looks good, etc., etc., etc. So that's what I think is going to happen. I think it's going to happen in a very strategic way. So firstly, I think BlackRock is probably already has acquired or is acquiring Bitcoin as we speak. They understand that this is that there is finality of supply here, and they fundamentally understand that. They understand how important that is. If they didn't understand how important that was, they would not have bought forests. They would not have bought forest lands to sell carbon credits. If you can get carbon credits and you can get trees, it was just an unlimited amount of trees everywhere. There's no value in the trees. There's no value in property if you can build an unlimited amount of property in an unrestricted way. There's no value in anything if you can just have an unlimited amount of it. The only very value of life is the fact that it's scarce. So BlackRock truly understands the scarcity argument. I believe they truly fundamentally understand it. And here's the thing, it would be unwise. I know there's a bunch of people that out there, the $1,000 net worthers and the doom and gloom boomer gang, that believe BlackRock doesn't understand. You think that you, on Twitter, reading news once it's posted, retweeting other anonymous people's tweets, you think you know more about the hardest asset known to mankind than BlackRock. You are extremely arrogant. Extremely arrogant. I don't care what Larry Fink's been saying on television. If I own a firm that big, I'm assigning 100 people, and their entire life process and their entire life purpose is to figure out Bitcoin. What is there to understand about Bitcoin? What are we missing? What are we not understanding? And I've done this years ago before I really take some action here. And this was evidenced, right? Because they had that report that came out, the internal BlackRock report that was leaked a year or so ago, a year and a half ago, whatever it was, right? Like, they understand what Bitcoin is, and you sitting there going, BlackRock doesn't understand what Bitcoin is. You are a fool. Got to look yourself deep in the eyes in the mirror and question whether you are talking sense or not. You are a fool if that's what you think. BlackRock has more people, I guarantee you, has more people than you know spending their entire day trying to figure out Bitcoin, right? And now they've figured it out. Now they want to take a gamble at it. So the ETF is coming out. BlackRock applies for the ETF. What does this do? This allows BlackRock and the institutions to suck up all the Bitcoin in the world as much as possible to push it into the ETF. And there is major advantages of that, right? Because number one, if you can control the price appreciation of an asset, that's more than enough for most people, right? Because whether you want to admit it or not, most of the people that talk about, America's so bad, the UK's so bad, Australia's so bad, Canada's so bad, are not doing anything about it. They're not going out there, they're not leaving the country, they're not doing anything because they've got a house, they've got family, they've got parents, they've got kids, they've got a wife, they've got a husband, they've got commitments in the country. So the most they can do is tweet about it and talk about it. They're not actually physically getting up and leaving. So in that scenario, the idea of sovereignty is less valuable. Most people just want price exposure. Most people relate price exposure to sovereignty. Well, I'm not saying whether that's right or wrong. I'm just telling you how it is, which is why an ETF wrapper is so important for Bitcoin, because it allows people to get that price exposure, and through the price exposure, it allows them to increase their wealth and then gives them more sovereignty. It might be a version of sovereignty and might not be true sovereignty, but it gives them a version of sovereignty, because if someone is worth $10 million instead of $100,000, they feel more sovereign. So they're now going to suck in all this Bitcoin into this ETF. And I believe the purpose of really doing that is to control as much Bitcoin as possible. So now you use the ETFs to control it, and now they'll add other little services and this, that, and the other. And one of the biggest, most profitable things that's going to come to Bitcoin is lending on Bitcoin. Because the amount of money that's generated, the amount of credit expansion that happens that's generated in the world because of lending on existing assets is huge, right? So, and I guarantee you it's going to be much more safer for an institution like BlackRock to lend against the Bitcoin ETF than it is the Bitcoin, right? And if you look at this, Chamath actually did this. Chamath, contributed his Bitcoin to GBTC, right? And he owns the shares of GBTC and he just holds on to them. That's what he did, right? Because this makes sense for someone who is the new buyer of Bitcoin. This makes much more sense to them because the new buyer of Bitcoin is much more sophisticated, much more sharper, and has access to resources and contacts that can allow them to generate liquidity on an asset that the market accepts at a much lower cost basis. For example, right, if the cost on borrowing against Bitcoin through Unchained Capital is 12% a year, through a market facility, it might only be 8% a year, right? Through an ETF wrapper, it might only be 8% a year. Right, and that might not make any difference to someone who owns one Bitcoin, but someone who's playing with $400 million, that makes a big difference. You've got to start thinking in an expanded way. The game is changing. These people are different. They are not the same people as you and I. They're not going to be sitting on Twitter and YouTube talking about Bitcoin. They're going to be buying Bitcoin. They're going to be waiting for it to go up. They're going to be liquidating it through these services. And by the way, I'm going to do a video on how I plan to spend my wealth without selling any of my Bitcoin, so make sure you subscribe to the channel for that. But they're going to be doing and having access to these different facilities, and these are extremely, extremely important because people need access to liquidity, and the banking system's going to love it, right? The banking system's going to love it because if they borrow against Bitcoin and Bitcoin has this parabolic rise and everyone starts borrowing against it, what happens to the deposit? Right, and this is what my new friend Peter Dunworth has been talking about. Right, you want to create liquidity on top of Bitcoin because that liquidity can be used to continuously circulate within the banking system. So the ETF to me is the best way to do that for the banking system, for BlackRock. So what do? They apply for an ETF once they figure out how to get it approved. And they apply for that, and they're very, very confident that they're going to get that, considering they've only ever had one denial of an ETF application in their entire history. And that application, the one that was denied, the whole industry was denied. So really, they've got a 100% success rate when it comes to actual products that make, or industries that make the market. So they're going to get this. They're going to get this ETF, and they're going to start sucking in all this Bitcoin. There will be people that convert their Bitcoin and put it into this product Whether you want to judge them or not, I don't give a shit, right? Whether if you are $1,000 net worther and you're going, oh no, but it's about your freedom, someone who's worth $400 million understands the game much better than you do. So, and 400 million, I'm talking small money, right? There's going to be people with $1 billion of Bitcoin. They completely understand the game and all the financing options that are available much better than you do as $1,000 holder of Bitcoin, right? You could tweet about it. They're actually doing something about it, right? And again, this might sound rude and it might come across as offensive to some people watching this, but this is the truth. You have to be aware of this because that's the buyer. If you don't become aware of what these latest financial, tools are going to be for you to actually take the Bitcoin that you have, the value you've accrued, generate liquidity on it so you can do other things without having to sell it, you are going to sell your Bitcoin to these people. They will happily give you $1 million per Bitcoin once they understand it, once they get it, once it's out there. They will happily give you $1 million. Why? Because they truly understand the finality of the scarcity of the asset. They understand how important it is to acquire as much of an asset as possible to control the market. Why do you think BlackRock is buying up single-family homes? I read a statistic. Only 41% of single-family homes, I believe, in the USA are owned by the people who actually live there. Think about that. So this is already happening in the property market. It's about to happen in Bitcoin, and it's better in Bitcoin because I don't need to send a team nowhere, right? Once I own the asset, it's on the blockchain, that is done. I reduce my costs. I infinitely reduce my costs of managing that particular asset. Instead of having a team of 2,000 people over the country making sure valuations are staying on point, et cetera, I've now got a team of 200 analyzing the market. So this is going to happen, and their first step is applying for that ETF. The next step, which is where the ESG part comes in, is what you saw with KPMG. KPMG put out a report, and they said Bitcoin is actually ESG friendly. You don't think that within the next 6 to 9 months, which is what I've been saying on Twitter, 6 to 9 months, that a major publication like the New York Times or Wall Street Journal or Washington Post, something like that, is going to put out a piece on why Bitcoin is ESG friendly? If you don't think that's what's going to happen, you're a moron, right? Because if I control the media and I influence the media, right, what I want to do is I want to acquire as much of this asset as possible. Now I want to convince my investors that they need to acquire as much of this asset as possible. So now I'm going to go and tell the biggest media organization in the world to do an article on why Bitcoin is ESG friendly, and I'll give them all the data to prove why it is. So now they turn around and say, okay, cool, Bitcoin is now ESG friendly. So now it's in the media. Now every single fund out there that thought about ESG because BlackRock pressured them into it says, wait a second, all right? Come in close. Wait a second. Come in close. Wait a second. You mean to tell me we can tell people that we're being ESG friendly and make 80% CAGR a year? Fuck yes. Get into as much of that asset as possible. They've got to do it in a diversified way, so it's never going to be 100% of their ESG allocation, but it's going to be an allocation. And all this time, we're talking about an asset that's completely finite. So what's the next step after they get that capital in? Well, the next step they're already doing as well, which is own the miners, right? They want to own the industry. BlackRock doesn't just come out and say, oh, we'll take a little part of it. They want the whole thing. So they're now going to start increasing their stakes in the miners. And they're now going to start trying to control the miners and trying to get majority interest in all of these miners. So this is the game plan here. Once that happens, once they control the Bitcoin, once they control the miners, once they control the ESG narrative, Bitcoin will now become friendly for finance. So the next step of that, and this might take 6 to 8 years, the next step of that will be, 8 years onwards, will be to figure out how to integrate Bitcoin in finance. Because now, wait a second, are you telling me that we can use Bitcoin and actually help the environment when we do transactions, when we start doing foreign currency transactions? Whoa, that's a real thing? Cool, buy Strike. Great, Strike's now an ESG friendly company because now we're now promoting the idea of we're saving the environment by using Bitcoin to do international transactions. This saves the carbon footprint by reducing down the number of people that we have stamping forms for every single transfer, the blah, 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 blah. It's all instant. Great. So now they start controlling financial services when it comes to Bitcoin. Oh, people want to lend, people want to borrow against their Bitcoin. Cool, we already got that happening. We've already got that happening because all you got to do if you want to borrow against your Bitcoin is go and put your Bitcoin into the ETF, right? Put your Bitcoin into the ETF, and you can borrow against it. Once you borrow against it, guess what happens? You borrow against it, you take that borrowing and you put it into your bank account, and now the bank has generated liquidity to now lend against. So that starts working. This whole thing, and as the price of that asset, right, goes up, you borrow more against it and you put more money into the deposit into the bank. Now the bank can lend against that. So this whole thing is designed for BlackRock to own the future of the expansion of the US dollar empire. Now, there's going to be some of you, the $1,000 net worthers that go, oh my God, this is so bad. You can't control it because Bitcoin is money for everyone. You cannot control what they're going to do. The byproduct of this is that you'll have a multiple millions of dollars of price action on Bitcoin, right? You'll have that multiple millions of dollars of price discovery because of the scarcity of the asset. But Bitcoin is going to help the expansion of the US dollar. This is how it's going to work, because this is how it always works when assets go up in value. Assets go up in value, people borrow against those assets, that borrowing gets dumped into the banking system expands. So that's why you have this rotating circle jerk until the whole thing falls apart. But in the medium term, and I'm talking medium term, when I say medium term, I mean 25 to 30 years. I'm not talking about, 5 years. I'm talking 25 to 30 years, right? This is going to cause that expansion, and it's a different way to create expansion in the world. So the ETF is extremely important. That's why they got into it, because they understand that normal, the normal average wealthy person wants to own something through an ETF. You don't have any accounting headaches. You don't have any headaches as far as, chain analysis goes. You don't have any headaches as far as accounting goes. You don't have any of those headaches. Just buy the ETF, done. Everyone knows how to deal with an ETF. So this is what I think is the plan. They want to control the whole industry, right? And everything hems on asset control, controlling the main players in the industry, which is why they have all these large shareholdings in all of the biggest miners, and ultimately financial services. Because the more financial services get adopted onto Bitcoin, the value of the price discovery of Bitcoin goes up. So they will encourage you to borrow against your Bitcoin. Right? It makes sense. They'll they'll create the incentive for you to borrow through the financial system. But this is the agenda for BlackRock. And while all of this is going on, ultimately the most beautiful thing about Bitcoin is they can't actually control the underlying Bitcoin. They can control the however many Bitcoin get put into that ETF, but you will benefit from the price discovery of this asset, even if you are a hodler holding Bitcoin in as a bearer instrument, which is what it's designed to be. You will benefit from the price discovery of it as people use it to control the financial industry. So there's a lot going on here, and there's a lot of depth to the game plan that BlackRock has, and I think hopefully this gives you an idea of the steps that I've laid out. So you're gonna get the ETF first, ESG friendly next. You're then going to get the controlling more of the infrastructure, and then you're going to get the idea of financial services, et cetera, et cetera, et cetera. So, and bear in mind, paying millions of dollars for a Bitcoin is nothing to these people. You have to hold on to your Bitcoin as hard as you possibly can. That's why I encourage everyone, please go find fiat generation opportunities. Please go do that. Go find fiat generating opportunities and protect your Bitcoin at all costs. Stop spending your Bitcoin for pieces of fucking art. This is the most important asset humanity has ever discovered. And you want to spend it right now while BlackRock is getting into this whole thing? This is crazy. It's insane what people are doing. Hold on to your Bitcoin as hard as you can. That should be the mantra for you. And remember, there's only 3 rules to Bitcoin. But before I get to those 3 rules, I want to say, if you are finding these videos interesting and you are finding the understanding of Bitcoin from a unique perspective, a traditional finance perspective interesting, please subscribe. I would really appreciate it. And more importantly, the faster you subscribe, the faster YouTube shows this to other people that also need to understand this. So it just helps each other. That's all I'm asking for. I'm asking for you to just click subscribe on YouTube, and I appreciate it in advance. And ultimately, there's only 3 rules to Bitcoin, which is step number 1, you buy Bitcoin. Step number 2, you shut the fuck up. And step number 3, you get fabulously wealthy. Well, I hope you enjoyed my Mitch McConnell impression there. I can't hold it as long as he can, but can you believe, before we get started in this video, can you believe that these people think that this is what leadership should be? That this is how leaders should be seen in the world by the people that vote for them? Can you believe how stupid they think that we are? And I'm not even an American. I know that my country also has some of the most stupidest people in politics. But if I was an American, because this is now not just on the Democrat side, right? And I think once you become a Bitcoiner, you realize like none of this actually matters. But can you imagine if you're a Republican, proud of America, etc., and this is what your leadership is? It's insane. So anyway, I hope he gets looked after. I hope he gets the help he needs. On both sides. I hope Biden gets the help he needs, and I hope Mitch gets the help that he needs. But really, what I wanted to talk about is why I think a Bitcoin ETF is coming inside of 2023. Why I support that movement and why I think it makes sense. Now, to some of you that are more leaning on the conspiracy side rather than the understanding how market sales and capital moves, this might sound a little bit crazy, but I think that we are heading into a period here where you have to get ready for an ETF. The flood of capital that is about to be unlocked with an ETF approval is something that most people have not factored in to what is about to happen. The gold ETF approval resulted in gold going up for 8 years in a row, and Bitcoin will do much more than that, and it went up by 350%, and Bitcoin will do much more than that because of the supply constraints on the asset compared to gold. So there is, if I have to think about, how the world works, how the world really works, the fact that after someone like Gary Gensler, who has been the SEC chair for a while, he's highly quote-unquote regarded, if you don't think that there is some form of conversation, some form of incentive-driven behavior going on at every level of a human being, you're wrong. So I firmly believe that there is conversation going on between BlackRock and Gary Gensler, and I'm not saying that there's collusion. I'm not saying that there's, anything like that. I'm definitely not on that side of it. And of course, the SEC just had a scathing loss in the lawsuit against Grayscale. So I'm not saying that there's this major collusion, but what I am saying is, if I was Larry Fink and I see Gary Gensler, and we're sitting down, smoking cigars, having dinner, whatever it is, there's definitely going to be some conversation about Gary's next steps. There's going to be talks about how Gary would be perfect to join the BlackRock team. There's going to be conversations about what his compensation could be starting at, depending on the type of things that we need to get done. And there could be these things. I'd expect that, if we were friends having dinner, I'm going to take care of my friend once his post and time in public service runs out, right? That's completely expectable and normal. So, there's a lot of people who think that that the ETF is going to come out directly before the halving in April, approximately April. And that just doesn't make sense to me. That just doesn't make sense to me because, let's put it like this. An ETF is a product. It's a product that you have to sell. Let's say you have a sales army of 50,000 people, which is basically what CPAs are, which financial advisors, etc., etc. This is what these people are when they work for firms and asset managers and things like that. They're salespeople. They're responsible for selling you into a product, and they get a commission off of the sale into that product. And so let's think about this like normal business people, right? What has to happen if Apple is launching a new product, right? What has to happen for them to prepare their sales team in order to sell that product? Let's say Tesla's launching a new car. You don't think that they take 3 months, 4 months distributing sales knowledge about this new product to their entire sales team around the world? You don't think that happens? Because I think that happens. I think that they invest millions of dollars in making sure that their salespeople can sell this product, because that's how they get capital into the product, is through selling the product. And the same way they sell cars and iPhones to corporates, etc., etc. Now, Apple has a different model because they go direct to the consumer, but same thing. They got corporate salespeople that convince, businesses why they should use Apple products instead of Samsung products. So there has to be a process for selling, teaching sales. There is a process. This is how the new product works. This is the commission you're going to get on it, etc., etc., etc. This is why you should get people into it. This is how much of the portfolio maybe we should talk about you influencing your clients. And then after you train a salesperson, what do they have to do? They have to divert all of their attention from the products that they were selling, and they have to get back on the phone and create sales events and presentations and all these other things for their existing clients on selling them onto their new product. This all takes time. You can't do this in a rush. And I don't think BlackRock does anything in a rush. I don't think Fidelity does anything in a rush. You can't do financial services in a rush. And one of the biggest selling points for getting people into Bitcoin, when you want to, say I was on the phone and I was selling someone the idea of Bitcoin, right? One of the selling features of Bitcoin is the halving, because all this demand is coming and the supply is about to get cut in half. You need to get into this ASAP, right? That's what I can imagine myself saying if I'm selling a product, if I had to sell Bitcoin like a product to someone, which is what financial advisors do. And so that's going to take time. They've got hundreds, maybe thousands of customers they need to get on the phone with, etc., etc. You need to get into this product, blah, 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 blah. So by having this ETF approved after the halving, you are taking away one of the biggest sales opportunities for financial advisors to make money. And BlackRock is getting into this because they can make money. That's why they're in this. That's why Grayscale is in this. That's why everyone is in this, because they can make money. They want the product sold so that they can generate a fee off the product, right? So it makes more sense to me that if there is any amount of, oh, Gary, we're going to look after you once you finish your public service. We've got this position for you over here. If you've got political aspirations, we can make that happen too, etc., etc. We're going to look after you. You've done a great job. You looked after us. Thank you so much. Like, that's not out of the realm of possibility, right? And it's not corruption. It's not collusion. It's just looking after your friend. So if there is any amount of that, and now you've got the judges, the 3 judges, absolutely ripping to shreds the SEC's arguments. I'm going to translate what the judges said to the SEC in normal human speak, right? And imagine we're just we're friends, we drink together, we say whatever we want, we use any words we want, and we've just had a debate, and I'm about to basically ridicule your point in the debate that you've made, right? This is how we would talk as friends. I think that you are absolutely fucking insane. And the point that you've made is the stupidest point I've ever fucking heard in my life. Right? That's how I would say it to you as a friend. Now translate that to legal talk, and that's what the SEC said. That's what the judges, 3 judges, said to the SEC. So now the SEC has 45 days to sit there and go, what do we do here? We can either delay this further and argue with the court. Now they've had 3 judges look at it. The next step is to get 17 judges to look at it. And it wasn't like one judge took the SEC side. All 3 of them said this is the stupidest argument we've ever heard in our lives. So now the SEC sitting there going, I don't know whether it's going to be worth going to 17 judges or not. So now they have 45 days to decide what to do. In that 45-day period, if they don't take any action, the judges will issue a mandate. And based on the ruling that was handed down, the mandate will probably be you convert this into an ETF ASAP. Now, do it. And, you know, the U.S. has, as much as we want to talk bad about the U.S. has the best capital markets and the best legal structure for those capital markets in the world. And so that's what will happen if the SEC doesn't come with a rebuttal or that's reasonable, right? Because basically what the judges said was, you've approved a surveillance sharing agreement for the futures ETFs, and apparently that's good enough to spot fraud. But you haven't approved the same surveillance sharing agreements for the spot ETFs, because apparently they're not good enough. This doesn't make logical sense. So, you know, the SEC is basically stuck between a rock and a hard place here. And they've got to find a way out. And the way out is you approve the ETF. It's just as simple as that. They'll gain political points. They'll gain, you know, they'll take a loss in court, but they'll gain political points. And so I think that's what happens. In addition to that, it makes sense that we get a 2023 approval, because if I want to sell this product properly, I want to use the #1 sales tool available to me, which is fear of future scarcity, of losing out, which is the halving. And all my salespeople, 50,000 of them everywhere in the world that manage, you know, I don't know if it's 50,000, but was an amount of salespeople. I want them to get on the phone and say the halving is coming. So it makes much more sense for this ETF to be approved inside of 2023, latest by that January 10th deadline that's on all of the ETFs, so that the companies can actually start selling the thing. They need to sell it to their clients, and they need that time to be able to sell it. So this is why I think that the odds, it might sound simple, sure, I haven't got, you know, the exact terminologies that, you know, my friends at Bloomberg Intelligence have. Yeah, absolutely. I'm just thinking like a normal person that has a business to run and what I need in order to do this. There is no way BlackRock's going to go, oh shit, you know, with a week before the halving, cool, let's just start selling this. No, it's not going to happen. It's BlackRock. It's BlackRock we're talking about. It's not going to happen. So that's what I think is likely to happen. I think the ETF will get approved. You know, James and Eric at Bloomberg Intelligence put the chance at 75% for a 2023 approval. Makes complete sense to me. I don't know how they get to 75% and not, you know, 78%, but for the argument, it makes complete sense. There is a 2023 approval of a Bitcoin ETF coming, and how this relates to you is, imagine you've got an opportunity to get to 1 Bitcoin. And if you don't, your progeny will curse you out for the rest of your life if you've been living in the West and you have not got to 1 Bitcoin, because they can't get any more. It's not like buildings. We can just build some more buildings somewhere else, lower the price, and they can have access to it. They can't. They will not be able to have access to it. Then you've got 50,000 people calling all of their clients with money saying, you need to get into this Bitcoin product that we just launched. And they're incentivized to do it because there's a fee attached to it. So the thing that you need to focus on, if you're watching this video, is, are you at the adequate amount of Bitcoin for your portfolio or not? That's it. You need to get to a minimum of 1 Bitcoin, I believe, and then you need to figure out what's the adequate amount for your portfolio as a percentage. Some of you might be listening to this and you've got $1 million net worth, but it's all tied up in residential real estate, which is what most people is at that level. In that scenario, you need to figure out, okay, how do I generate some liquidity to actually put into Bitcoin to diversify my holdings? And that's a question that you need to ask. But waiting for the ETF for that to happen is silly. You need to start getting to that right now. Otherwise, you'll be standing there. You know, if you don't follow the 3 rules of Bitcoin, which is step number 1, buy Bitcoin, step number 2, shut the fuck up, and step number 3, get fabulously wealthy, you'll be standing there looking at the Bitcoin chart like Mitch McConnell does when he's trying to address the nation. If you are under 50 years old and you're thinking about buying real estate, have you actually thought about it? Have you thought, recently, I'm going to buy real estate? Real estate is the dream. I've watched all these YouTube videos, and the smartest thing that I could do right now is to buy some real estate. So I got my start in real estate, and I think that's the stupidest thing anyone under the age of 50 could do. And in this video, I want to talk a little bit about why I think that is. And then, of course, I want to hear your opinion in the comments. And if you like the video, then please do subscribe. That's very, very important, because the faster you subscribe, the faster YouTube shares the video with other people that also need to be saved from the demonic curse of real estate. So why is real estate a demonic curse? Let's talk about this. So firstly, I got my start in real estate. I was negotiating new build property deals, and my job basically was to go to a property builder that was completely distressed, couldn't figure out how to sell the last 20 units, structure a deal to sell all of them within a space of 45 days or whatever the ending period of their sales cycle was, right? And what you learn during this period is that people are fucking addicted to real estate. People want to buy property. They've been ingrained into their brains that buying property is the best, most smartest thing that they could do, and they will not believe anything anyone tells them about doing so. And so I had to think about why. And also, my parents go through this too, right? They've got their start and their security and everything from property. So they love it. They love their property. They love their real estate. I just about managed to get them to refi and buy 1 Bitcoin for every property that they have. But before then, it was, no, Bitcoin sucks. It's all about real estate, et cetera, et cetera. So, there's a reason why real estate is the largest asset by market cap in the world. It has the highest stock to flow ratio of any asset, and it is an asset that has been regarded all around the world as the premier asset. If you get extremely wealthy, one of the best things that you can do is buy a bunch of property in areas that are exclusive, right? Like if you buy a penthouse in number 1 Hyde Park in London, you're saying something about yourself. But when did property become this asset that everyone should just pile into? Well, I have a couple theories about that, and that's what I want to talk about, really. Property, to me, is the worst asset when we are entering times of unrest, right? Property is loved by the people who are at threat of time of unrest, which is the governments and other people like that, because property allows you, as if I'm a government, I can incentivize you to put your money into property, and now you're under my control. If you buy a property, whether it's your own home or an investment, you are under my control, right? I can say that, yes, you own that property, but if you ever cause any problems, there are so many legal loopholes where I can get involved and take control of that property until you behave well. And that's really an issue with property and real estate right now. And especially as we enter a world where, more and more control mechanisms are coming into the world, more and more control mechanisms like CBDCs and everything else are coming to the world faster than we could ever hope for. Trying to further invest into something that is easily controllable is ridiculous. Remember, if you don't think that they can control property prices, who controls interest rates? The governments. Who controls access to credit? The governments. Who controls the ability to build property or not? The governments. And so, of course, it makes sense that in the U.S., they'd give you a 1031 exchange agreement where, you don't have to, you can defer your taxes as long as the money goes straight back into property because it is fixed. You can't just leave, right? They don't want you putting that money into watches or Bitcoin because you can just pick up and leave, and there's no control over you as a subjugate of the empire under which you are choosing to live. So real estate, that is the point of real estate. It is designed as an asset. It is believed that real estate protects you against inflation. That is an absolute lie. That is an absolute lie. But the point of real estate is the main point of real estate, and why every major country in the world has tax incentives for you to invest in real estate, because the money stays within the borders of the country. The money is secured, and if at any point you misbehave like a bad little boy, I can send the government agents with a court order to take control of your property. At some point of wealth, you're going to have to buy some property. But until then, I don't think buying property is the smartest thing to do, especially right now when you have to actually consider what your other options are. Now, that's the conspiracy side of it, right? Well, before we finish that, property prices have a cap because a government needs people to have a roof over their head in order to vote for them. So property will be the first thing to be attacked. Like Canada started banning, foreign investors from buying property, etc., because the property prices were just too high. They need to keep people happy, because if they don't keep people happy, unfortunately, with the systems that we live in, the little pesky problem of having a democracy means that I've actually got to keep the peasants happy so that they vote for me. So in order to do that, property is going to be one of those levers that is used, right? Property, I firmly believe, right, especially after the flu season that we had in 2020, I firmly believe that if you give someone a roof over their head, some food in their stomach, and an education for their children, or now for their dogs and cats, they'll do whatever you want them to do. It's as simple as that. They will do whatever you want them to do. So property is one of those levers that they can hold. Now, let's look at the money-making side of property. Property has not kept up with inflation, no matter what anyone says. It has kept up with the published price index that is out there. And certainly people look like they're getting richer through investing in real estate. But in reality, they're not, because if you value property prices against the amount of debasement that's happened right now, on the 2nd of September 2023, we are touching 2008 lows in terms of value. So if you wanted to create value rather than just price appreciation, it has not worked. It has not worked. Real estate and property has not created you more value. It has created you higher prices, and therefore you look happy. And what do I mean by that? It's very, very simple. What I mean is, if the total money supply was $100 and your property portfolio was worth $1 of that $100, your property portfolio controlled 1% of the money supply. What they've done is taken that money supply to $300 and told you that your property is now worth $1.80. So what that means is that your property price, the price of your property has gone up, and you look happy, and everyone around you congratulates you like the Mitch McConnells that they are, standing there like NPCs clapping for everyone who gets involved in property, not realizing that your wealth is actually being stolen from you through the value mechanisms of debasement. And the reason why this can happen is very simple, because they control both the levers. They control the demand lever and they control the supply lever. The unique thing about Bitcoin is that Bitcoin, the supply lever cannot move no matter what happens to the demand lever. It's the first asset in human history where no matter what we try and incentivize through demand, we cannot affect supply. That's why the scarcity is the single most important thing about Bitcoin. So when it comes to property, yes, you can absolutely, I think everyone should own a home, and I think everyone should do that. I personally don't at this moment in time, because I'm still deciding where I want to live in the world. And eventually, I would say in the next approximately 5 years, I'll be buying 3 homes around the world, and that will be my limit, because and they're going to be for me. I'm not going to be buying investment property anymore. And when it comes to making money, a lot of people think they're making money, but the money that you're making in property is due to the credit expansion. So the entire amount of money that you make is dependent on the governments that say, yes, we're going to expand this credit or not. And even then, if so many people own property and you see the prices of your property go up, have you actually made money if everyone's making the same money? I don't think so. So the people that do make money with property, how they're doing it is very, very simple. They're leveraging to the hilt, and that's the only way. If you increase the percentage leverage, you increase the percentage return on the asset, and they're doing it mainly with other people's money for other people, and therefore they have an infinite return on the property. That's fine. If you want to get into property and that's what I did. If you want to get into property and your idea of getting into property is, I'm not going to use any of my own money, I'm going to use other people's money, I'm going to facilitate their desire to get into property, and I'm then going to take the profit I make from that and put it into Bitcoin, completely fine. That's absolutely fine. That's running a property business. That's not investing in property. What I'm talking about is someone's got $500,000, $1 million, $2 million in the bank, and their first thought is, I'm going to leverage that 3x and get into property because someone on the internet said it's a good idea. You're going to lose, because not only do you have the competition, the challenges of getting into property, you have to find the right deals, you have to talk to the right people. Everyone is a shark in the property game. Because when I was in property and I had a good deal, I could tell no one about it until there was an NDA signed and other stuff involved with securing that property deal. So if you find out about a deal and you're not a big player, there's a reason why you're finding out about it, because somebody else passed on it. And that's fine. That's how the food chain works. Sometimes you just have to be okay with that until you get to a certain level, and that's part of the game. But it's much easier just to buy Bitcoin. Bitcoin is the ultimate property, and so it should be the choice. So if you've got that money sitting in the bank and you're going, I'm going to get involved in real estate, I'm going to go buy a bunch of property, I'm going to generate this cash flow. Oh, the latest thing that I heard, it's from a friend of mine, he said, I'm going to take this money, I'm going to buy property, I'm going to take the cash flow that comes out of the property and buy the Bitcoin. This is the stupidest thing on earth, because while it makes sense on surface, it is a very old fiat mindset, a way of doing things. You're going to take that $100,000 or whatever it's going to take, put it into property, right? You're then now going to take a 12%, if you can get lucky, depending on the type of property you're buying, right? Because if you're buying growth property in the UK, for example, or anywhere in the main cities of the US, your yields are going to be 4%, 5%. If you're buying non-growth property, then your yields are going to be 12%. Right? So we can look at both of these examples because they're both retarded. If we look at the growth property example, you've got a 4% yield that you're now putting into Bitcoin. So if you've got £1 million invested, and you're generating a growth, a 4% yield, you're making 40,000 that you're putting into Bitcoin every single year, and it's split over the months. Instead, what you could be doing is taking that million, putting it straight into Bitcoin and compounding at 80% a year. You will never catch up. You will never ever catch up with that free income. If people say it's free income I'm putting in, it's not fucking free income. There's an opportunity cost of that million that you had to put into the deal. So that's the growth property example. And then you have the cash flow property example where you're making 12% a year. You got $1 million putting into property, you're making 120 a year. Right? 120 a year sounds better than 40 a year. But you got to remember, the million is compounding at 80% CAGR. And then you don't have... So either way, it's just dumb, right, to do it. It's just dumb. It doesn't make sense. Subject to you understanding Bitcoin. So that's what's important. There has to be the understanding gap that has to be filled here as to what Bitcoin is. Property feels like a safer asset because people have known it for longer. My parents have been involved in property for 35, 40 years. They know property. It's deep inside of them. They know and understand it. There's other families that have had property in their bloodline for, 4 generations, 5 generations. I'm not here to try and tell you that I'm going to convince you to get out of property. That's not going to happen. Here's what I am saying. in the future, the capital that you're thinking of investing into property may want to consider taking a percentage of that and putting it into Bitcoin. What this video is for someone who's been working your ass off in a good job. You've built some capital up. You've got $500,000, 1 million, 2 million, 3 million, whatever it is. Maybe you sold a business, whatever it is, and you're going, I'm going to get into property because that's what YouTube told me to do. You're an idiot. You're an idiot. Because you're going to be missing out on the scarcest asset on earth. You're going to be missing out on 80% CAGR returns. Just for what? Dealing with volatility? Oh, then the next question is, but property generates me a cash flow. So when someone says that, what they're actually admitting is that they have no idea how to do financial planning. Because the point of the cash flow is so that you can pay your expenses. Well, if you just take the time to understand Bitcoin, you can understand that at certain points in the Bitcoin cycle, you need to liquidate a certain amount of Bitcoin or borrow against it or whatever you want to do to pay for your expenses. But people don't have these planned lives. They're bad at financial planning. So what they want to do is buy property, send the problem away, and then get the problem to send them income, and then they can set a limit on a monthly basis. I can set a limit for myself. This is how much I'm going to spend this month. It's not that hard, right? But unfortunately, the fiat system has incentivized us to be really bad at financial planning, and therefore we want to get involved with all of these old school investments that basically we become dependent on. Then you got the idea that property is actually a job, right? Unless you are buying a commercial sized deal where you've got, 20 to 50 units and you're going to have a management agent and all this other stuff, most of you guys are going to be thinking, I'm going to buy that property, I'm going to paint it, I'm going to do this, that, and the other, I'm going to flip it, or I'm going to rent it out, and et cetera, et cetera, et cetera. You're having these wet dreams. But really what's going to happen is you're going to hate your life. You're going to take time away from your family and your children. You're going to take focus away from the job that actually made that money in the first place. And then you're going to get into a property that's going to underperform and steal your wealth from under your feet. It doesn't make sense. All in the meantime, while we've got Bitcoin, which is the hardest, most scarcest asset on earth that has ever been discovered, going through its main adoption phase. Real estate's not in its main adoption phase. Real estate is in the phase of, okay, well, pretty much everyone owns it. Now what do we do? That's real estate, right? Bitcoin's going through its adoption phase. Everyone is starting to own it. Everyone's trying to figure out how it works. Everyone's starting to figure out how they can be involved in Bitcoin. And you're sitting here going, I want to invest in real estate, which everyone owns, and I'm gonna voluntarily screw myself by allowing the system to steal my wealth and the future of my children. There's more people today in property that thought they were doing the right thing, which is the same story of my parents, thought they were doing the right thing. Now, 30 years later, they're sitting there going, why isn't my property portfolio giving me the life that I thought it would? Why do I have to still downscale my life even though I did the right thing and invest in property? That's the reality of most property investors. Why? Because they didn't think about debasement. They only thought about prices. They only thought about price index. So while Bitcoin, while real estate has beaten the price index, it has not protected you against the debasement of the currency. So that's what's happened. You got all of these hurdles involved with buying property every single step of the way. You got to buy the property, you got to find the property, you got to do the deal, you got to close on the deal, then you got to maintain the property, then you got to rent the property, then you got to deal with the tenant that you rent it to. It is a full-time job. It is not going... And by the way, most property investors today, if they actually paid themselves a wage for taking care of all that, their property portfolio would be at a negative, if a break even, if not a negative. Right? If you actually paid yourself what you think you are worth for the hours that you were putting in, your property portfolio cash flow is probably sitting at a negative. So there are many, many bad reasons why you should not invest in real estate. But it is the asset. It is the darling asset that everyone thinks. Yeah, it's a darling asset when you own, an apartment in number 1 Hyde Park, right? Or Park Avenue, right? Whatever the main building unit is called in Park Avenue. That's when or you own oceanfront property in Malibu. That's a darling asset. You buying homes that people can just live in and then screwing yourself up over buying the hardest asset that humanity has ever created because you think you're going to get a higher ROI, not factoring in your own time. That's called being stupid. So be prudent with your decision making and be prudent with what's going to happen here. And the only reason most people are still buying property instead of buying Bitcoin is because they don't understand what Bitcoin actually is, which is why I set up this YouTube channel and I want you to subscribe to it because we need to get this message out there. Take the time to understand what Bitcoin is. It is extremely important, and it is the most important asset that humanity has ever created because it is the scarcity. That's the reason why you're buying the property. The scarcity is why you're buying stocks. The scarcity is why you're buying gold. And if you can get to that understanding, you realize that Bitcoin is the scarcest asset humanity has ever created. And you have to own it. If you are under 50 and you are thinking about buying a property, whether it is your own home or whether it is investment property, etc., and you're not at 1 Bitcoin, you are a moron. You need to get to 1 Bitcoin first. You think buying the property is going to secure your children's future? It's not. It's not. Because my parents did property for 40 years and it has not secured mine or my brother's future. That's no hit against them. It's how the system works. The system is designed to get you to slave away, earn the money that you need to earn by being a doctor, being a lawyer, having a job, being a construction worker, being a police officer, whatever it is. And then it forces you to speculate and take the risks so that they can capture 95% of your wealth back into the system. So property is not the darling asset that everyone thinks it is. There is only one darling asset, and that is Bitcoin. Property is bad on many, many, many levels. It is certainly not the freedom asset that most people talk about. Unless you are doing what some of the bigger people are doing, which is taking the money from a bunch of people, getting into commercial deals, having management agents there with the view to flip that deal to a big conglomerate that wants to come up and buy the property portfolio that they have created. That's different. That's doing property as a service. I'm talking about actually owning property. It's very, very different. So take this second to think about real estate. If you got any questions, please leave them in the comments. Please subscribe to the channel because I think that's extremely important. If you think that the message is important, then the best thing you can do is subscribe to the YouTube, because the more, subscribe to YouTube, follow me on Twitter. The more people that subscribe, the faster YouTube shows the video to other people. So I really appreciate it in advance. And remember, no matter what you think about property, there are still only 3 rules to Bitcoin, and that's rule number 1. Step number 1, you buy Bitcoin. Step number 2, you shut the fuck up. And step number 3, you get fabulously wealthy. Down. How many people do you know that have lived their entire life, raised good children, etc., and are now downsizing later on in their life?
Oh, everyone's
You should
parents.
be upsizing. You should be upsizing in the later part of your life, because that's the celebration of your life. You should be upsizing, making space for more grandchildren, etc. That's what people should be doing, but they're not, because the fiat system incentivizes people to shrivel up and die, and that's what Bitcoin fights against.
Wow. Totally
I
agree.
feel like life is a journey of turning arrogance into confidence, right? In a weird way. Like, that's what life is about. Like, life is about believing in yourself and what God put you on this earth for, and then spending your life proving that. That's what life is about.
Well, hello, human. Thanks so much for tuning in to the BU Get Paid podcast. I'm your host, Amy Taylor, and I have one goal by being in your ears: to explore as many conversations and perspectives as possible on stuff we did not learn in school. You know, stuff that would have actually helped a lot more of us thrive rather than just survive as grown-ups in an often challenging and ever-changing world. As the title might suggest, this includes anything involved with knowing ourselves, understanding money, and generally anything that might offer some insight into how we can all be happier humans. With that in mind, wherever you're listening, you'll find links to some of the best resources I have personally found to help with all of those things. Sometimes I'll talk about these in a bit more detail, and I want you to know I will only ever recommend products, services, and companies that I am a customer or user of myself. Now, we're all grown-ups here, and as such, you'll possibly hear the occasional use of grown-up language. More importantly, anything discussed here is personal opinion and intended for conversational and educational purposes only, and should not be taken as financial or investment advice. That's the housekeeping done. Let's get into what I hope is some helpful chat. This is probably the most unprepped I've been for a conversation with anyone, because I don't know anything about you. No, I know. And then you said to me, I'm just going to read your tweet quickly. What did you say when I tweeted for guests? This could be fun, as long as you promise not to tell me what you'll ask and make what you ask as uncomfortable as possible, however, as beneficial and funny as possible for the audience. And I said that's right up my street. So yeah, I don't know a lot about you. Do I call you British?
You can call me British. You can call me British Huddle. You can call me the Bitcoiner. You can call me mate. You can call me whatever you want to call me.
Is that cigar smoke I see too?
That is, yeah.
I love that.
And
there's a lesson right there in personal branding for anyone listening. I know if I know nothing else about you, I know that cigars have become part of your brand.
It's cigars. I've been smoking cigars since I was 18 years old. Cigars were the one, because I don't drink anymore. I never used to be a big drinker anyway. I know that's going to be offensive to you from the part of the world that you're from and the shirt you're wearing.
Not at all.
Everyone in the UK tells me that I'm not being a proper Brit by not drinking. So, I started smoking cigars when I was 18 years old. It was the one thing that allowed me to actually form connections on a different level. Like, that's what it was for me.
What kind of connections? Interesting.
The best connections. I was sharing an office with a friend of mine, and we were sharing offices for 2 years, and we had never had an in-depth conversation about life.
Wow.
And one day, a cigar lounge opened up in Canary Wharf in London, and he said, "Hey, the cigar lounge opened up. You want to go smoke a cigar? Have you ever smoked a cigar?" I was 18 years old, and I was like, "No, I've never done that. But it looks cool in the movies, so let's go smoke a cigar." And I smoked my first cigar. It was a Cuban Monte Cristo Regatta, and me and him.
That sounds fancy.
Bear in mind, we sat next to each other for 2 years, right? And we didn't know anything about each other. And in that 2-hour window, we had the most in-depth conversation about life. And then the week after that, my best friend and I went to smoke a cigar, and we've been smoking together ever since. And for me, it is this moment to connect, whether it's with someone else or myself or the universe. Like, it's just the moment to connect. So I've been a cigar fan now for a very, very long time.
I love that our conversation has started that way. And you know what? I'm learning more and more that sometimes less preparation for these conversations is better, because that's such a perfect example. Look at you. I love it. Anyone who's listening I'll make sure we put some clips on social media so they can see your cigars. But that's such a lesson in something I sort of coach and speak to people about all the time with marketing and branding. Like, any part of you that you might think, oh, I won't make that part of my brand, or I won't smoke on camera, or I won't, let everyone know that I smoke cigars, or that story. It's the perfect example. It's like the most random part of you that you think you shouldn't share or might not share or isn't relevant or isn't interesting caused you to have, like you say, a meaningful conversation with someone that you've been sat next to for 2 years.
Yeah,
perfect.
It's life is full of individuals at the end of the day, and that's another beautiful thing about Bitcoin, right? Like, whoever you are, you can come to Bitcoin and bring yourself, and you can still add value, right? Yeah. And that's what's beautiful about it. I do want to clarify, because I like drinking tea out of a shot glass. So I don't want anyone to think he just said he's not drinking alcohol and now he's drinking vodka. Like, I just want to make sure it's tea.
It's another random tea out of a shot glass. There's a title for a video that will get some intrigue. Cool. I'm really glad we started that way. Tell me where you are. That backdrop looks, I'm going to guess, somewhere in Latin America.
Yeah, I spend time in several different places throughout the year, but currently I'm in Medellin, Colombia.
Okay. Ah, good guess. Yes, it looked like a kind of Yeah, the landscape looked like it would be somewhere like that. Okay, well, let's rewind a bit. So I discovered you, I think the first time I stumbled across you was on a Twitter space, which for anyone who's not on Twitter is basically just like a audio chat room, I guess, isn't it? Like a webinar kind of thing, but just audio only. And it was introduced probably sometime last year or year before.
Yeah, I think it was like 2021.
Yeah.
I don't know. Like I really started connecting with people on Clubhouse. I don't know whether you were on Clubhouse or not.
Oh, very briefly, but only personal intrigue. It wasn't something I was using for work. But I remember I essentially ended up on Twitter because of Bitcoin. It seemed to be where a lot of the conversation happened and a lot of the big names and influencers were. And yeah, I jumped on this Twitter space once and I was like, oh, you can literally just put your hand up and speak. Fantastic. This is so much more interactive and up my street than, you know, typing or messaging and all the comments and trolling. And it seemed to have a lot more depth. So found you, then we connected, and you've got quite a big following. So let's rewind and like your British hodl, for anyone who's not a Bitcoiner, it's hold on for dear life, isn't it? The roller coaster that is riding Bitcoin price volatility for those who care about the price. So you're in Colombia now. Let's go right back. Like, what's your career background? Where are you from? Because you've got a bit of a twang to your accent. I'm assuming you've spent time in lots of places, but take us back to what you do, what you did, how you found Bitcoin. Let's just move through that structure.
So I thought Bitcoin was a scam until 2020, right? We'll start there.
Okay.
I thought it was a complete and utter scam, and that's because my background is in real estate, and my background's in equities, and my background's in gold, traditional assets. I started negotiating property deals alongside my father when I was 16 years old in London, and helping people sort of navigate. Like, they had an investors club, so to say, and they would basically, different members of the club would go and negotiate deals, bring them to the club, everyone would take a piece, and that's how they were growing their portfolios. And I, at 15 and a half years old, was listening to my dad negotiate a property deal on the phone, and, you know, with a slight level of confidence, in truth it was arrogance at that point, turned to my dad after he got off the phone and said, "That looks easy." And the biggest blessing that I got in that moment was he didn't tell me to, you know, can I swear on this podcast?
Of course you can. I just lost you briefly, but I think by the time it's finished, you'll be in sync. I just lost you. The biggest lesson you got was...
Right. The biggest lesson I got was he didn't tell me to get fucked when I said that looks easy. Right? He told me, if it's that easy, prove it. And so now I had to take my arrogance and actually prove it. You know, and I had that sinking moment when you're like, oh shit, I think my mouth has just written a check bigger than I can cash at 15 something years old.
I have no idea how much I love that though.
Yeah, and then I had to go and do it. So I started reading books on real estate. I started learning what a mortgage broker was at 15, 16 years old. I started learning what a lawyer was. I started learning all these things, and then I remember, you know, my first phone call with a property developer, and it was terrifying. I was sweating at the end of it. It was awful. But then very quickly I learned that I had a superpower that nobody else did in that investors club, which was, I'm 16 years old, and on the phone you can't tell whether I'm 16 or 48, right? Like, I can put on whatever I want to put on, and I can walk away from the deal, because worst case scenario, I've got to go to school. I'm going to school anyway. So whether you give me this deal or not, I'm going to school. There's no way around that, right? So I had the ability to walk away from deals that other people didn't, and therefore I would get the best deal very quickly.
Right.
And then from that, went on to helping him, you know, and working with him to sell these deals to different investors, growing that, and then transitioning a little bit to equities, and then transitioning to gold after the GFC, and then realizing that, you know, I was completely lied to, and realizing that my perceptions on Bitcoin being a scam were completely wrong. in 2020 during the pandemic.
So I missed a little bit of what you said just then, up to the GFC. So did you basically continue working with your dad in real estate and just doing property development type deals?
So we weren't doing property development. I hated property development because
Okay.
I was 16 years old. I couldn't empathize with someone that was in a tough moment where they had to sell their property. I couldn't get emotional enough to secure that deal, right? I was just walking in looking at numbers. So for me, finding my path to success was looking for the new build developments that just weren't selling for whatever reason, and walking in and saying, right, you've got a development of 50 units, you've got 20 left, we'll take all 20 and close within 45 days as long as you can give us X amount of discount.
Oh, okay. So getting undervalued,
that was my world.
going into
Yeah,
undervalued
that was my
assets.
world.
Okay. I remember going that I relate to that somewhat. Certainly not at 16, but I remember when I first left uni and then had one or two jobs, and remember going to a property investment workshop that I think I saw on the train in the Metro newspaper. And it was just like one corner back in the days when we had newspapers and you'd get to work with your hands all grubby. And it was like £400 to go to this workshop, and I went, and it was
Yeah, I've run a few of those.
I can imagine you have, yeah. And it was my first exposure to people talking about the book Rich Dad Poor Dad, which I subsequently read and changed my life. But I remember that workshop just being like, you can buy a whole house for like less than £50,000, and how do I get my hands on money? It was the only thing that made me want to get a job, because that would enable me to get a mortgage, and then I subsequently later on bought investment property. So I totally understand what you're talking about. But being in a position at 16 to be talking about that kind of money, like, that's setting you up for life in a way that I
was
can't
lucky.
imagine many teenagers do.
I mean, it was hard work, but I was lucky, right? Like I said, I was already lucky that my dad had enough belief in me to not tell me to get fucked. That was the number one blessing, I would say, in my business career. But for
Proof
us,
of
it was
work.
even more. It was even
Your dad
more. It
kind
was
of
even.
gave you the proof of work treatment.
It was actually even more exciting, because in the UK, what you could do is you could do what's called an instant remortgage on the day of completion, which means that I could go buy a property that was, say, £100,000, get a valuation on it at 100,000, pay 80 for it because they couldn't sell it, and then on the day of completion refi at 95%. So now I've just paid 80K for this property, and now I've got back 95K from
You've made
the lender
15K on the day.
So I've got 15K at 0% interest for nothing. So I guess for me, the thing that was, because a lot of real estate investors get very, very focused on property. And I think for me, when I saw that moment, I was like, this is not the real estate game. We are not playing the real estate game here. This is a credit game. And then everything just became about credit for me at such a young age.
Yeah. That's exactly right. And I think that's the biggest thing I took away from that property workshop. I think, they took huge amounts of money off people to be in their mentorship program for months and years on end. And I think they even, from memory, I might have used them to help me finance one of my purchases, because all they needed was someone that could take on a mortgage. And you're right, it was the person on the other end of the transaction was definitely a distressed homeowner, which didn't feel good, but I didn't have to deal with them directly. And then I just kind of told myself, well, they're distressed, they need to be out of their mortgage. So it wasn't completely a bad feeling around it, but it definitely felt, in hindsight, it definitely felt like one of those zero-sum games where someone has to lose for someone to have to win. But one thing it did open my eyes to was the creativity of how they would structure this money, and that it was perfectly doable and supposedly perfectly legal, and it was. But it was, I guess what I'm getting at here is just, it all comes down to how you think. Like, we are so conditioned, the average person is so conditioned to property being get a job, get a mortgage, buy your house. It's only those that kind of want to do better or make more money that start to think differently, and that's just the key piece in everything. It's just, you've got to change your mindset around these things, and Bitcoin's no different, right?
Absolutely. Like I think once you get to a certain point, you just realize if everyone's doing something, it's probably the wrong thing. Like
There you go. Yeah.
it's just very simple, and
Yeah.
that's helped me a lot through my entire investing career, not just Bitcoin, not through
Mm.
anything else. I was lucky. Like there's a lot of Bitcoiners who are very very prominent, and I bow my bow down to them for being able to stick through the volatility of the really early stages of the market. That wasn't
Mm.
my story. I come from a background where I had success behind me before I discovered Bitcoin. Bitcoin is
Mm.
probably my second major wealth accumulation step. Most people only get one, and it's mostly real estate based on the data that we see. If you're in
Yeah.
the real top 0.1%, it's mainly equities. If you're in anything between the top 0.1% and the bottom 50%, it's mainly real estate. And so yeah, like most people only get one step to building real wealth, and I'm
Mm.
blessed because I'm on my second at this point.
Yeah. That's
But it is
awesome.
about mindset. It's about mindset. It's about how do you change? Can you let go of something that meant so much to you, that saved you from a place where you were struggling, you were trying to find answers, and this thing came along and gave you the opportunity that you thought it was? Can
Mm.
you receive new information to allow you to see that while it might have worked for the last 35, 40 years, it's not going to work for the next 35 or 40 years? That's the key differential factor between people who stay rich and people who make it once.
Bang on. Yeah, totally agree. When you say that, and sort of, I guess, layering on top of what you just said before about people only get one step to wealth or one way, especially if you're referring to the middle class, are you referring to the fact that most people's wealth is their home, i.e., real estate,
Yeah,
the
I
average
what I
person?
meant is people get one opportunity, right?
Yeah.
Like for real wealth. Like I make money in all kinds of silly things, right? But
Mm.
what like the real wealth, like where you 20x your net worth, like those
Mm.
moments, most people are only going to get one of those, and
Mm-hmm.
people are so conditioned to making it property,
Mm.
and it's awful. Like right now, I just read the study. If you want to buy a house in Toronto right now, you need to save for 25 years. If you're earning 250,000 Canadian dollars a year, you need to
Yeah.
save for 25 years for the down payment, not the full property, for the down payment. It's insanity.
And that's based
So
on the price the price of that house today, which it will not
today,
be in
exactly.
25
And
years.
it's not
Yeah.
it's not based on the Canadian
Yeah.
government's willingness to devalue that money over the next 25 years too.
Yeah. But you're right, and I think that's why I think once you're down the rabbit hole, as we proverbially call it with Bitcoin, but you don't even have to be down the Bitcoin rabbit hole. It's just maths. It's just thinking differently and being open to new information. And the conversation I find myself having with people to encourage them to start earning their money differently, where they can catch up, it is just, you have to think differently because people want it. Everyone's looking for a way to do better. I fundamentally believe that people want to do better, but then it's funny how the minute they find it, whether it's a business opportunity, or in my space it's learning to earn money on the internet or build a business. In your space it may have been real estate, but the minute they find it, they then find everything about it that's wrong or scammy, and Bitcoin's the same. Well, then how
Yep.
could it fix this? And it's like, well, hang on a minute. Like, you came here asking the original question for a reason, because something in your life or your life in general isn't working. Like the saving for a deposit, for example. Well, we got this far and we were about to put the down payment down, and now everything's gone up 20% like it did in COVID. What do you find people? Do you deal with high net worth individuals coming to you about Bitcoin? Is that your market, or?
I, my I don't know why I decided to become British holder, right? It just sort of happened. It was one thing after the other. When I
Yeah.
first came into the Bitcoin space, I just went on to Psycho Twitter, basically Psycho Bitcoin Twitter, and was looking around, and I started talking to this guy, American holder. I'm sure you've heard of
Love
him, right?
him. Yeah.
And I started talking to him, connected on Clubhouse, talked to him even more, and I was like, well, if that guy's American hodl, I think I'm British hodl. after I went through the development process of understanding what Bitcoin was. And that's really how it came about. Why I decided to do YouTube videos and things was one moment in my life, and that was realizing that people like my parents who immigrated to the United Kingdom spent 35 to 40 years building a property portfolio because they believed it was the right thing to do. Right?
Where did they move from? Sorry to interrupt you.
My dad's from Africa, from Uganda and Kenya, but with a background in Uganda and Kenya, and my mom's from India.
Wow.
And so they moved to the UK, built a background, built a property portfolio over a 35 to 40 year window, thinking that it's the absolute right thing to do. Why? For their children, because they want their children to have a good future. Sacrifice day in, day out with all the stress that's involved in building that, only to have the value of their property portfolio be 80% shy of what it should be in order to account for all the pounds that have been printed. That's why I decided to launch a YouTube channel, nothing else. That is my audience. My audience is rich people, but it's the rich people that don't believe they're rich, right? It's the millionaire next door. It's the someone who's got, $1 to $10 million net worth, who doesn't understand that their wealth is being printed from, their wealth is being debased from underneath them, even if they're doing the right thing. That's the most insulting part. You're doing the right thing, taking the advice that you're given, and you're still getting fucked. That is who my content is for. And I always say this, I think rich people need Bitcoin more than poor people, and I think poor people need Bitcoin adoption more than rich people.
I agree. Just to rewind quickly, when you mentioned, those with a net worth of 1 to 10 million, that's something that I think not enough people, again, open their mind enough to consider that they are in that bracket. Like most of my friends, I'm 40, millennials, most of my friends own their own home. And that's just conditioning. There's nothing. And if it's your life goal and you want a house in the same place, or, a home for your children, everyone's got different goals. What I struggle with is that I don't think anyone's actually sat and consciously thought about that being the goal, or if it's just a goal they've inherited from their parents and they're thinking, a bit like what you've just described. And the average person in the middle class probably does fall, or a couple, let's assume it's a dual income household, they probably do fall into a net worth of $1 million to 10 million if they've bought a house 15, 20 years ago and have been paying it off ever since.
Yep.
So, that I just wanted to clarify that the numbers, because it's the numbers part that most people just don't sit down and crunch to a point of realizing how much they're going to need this, because the majority of their work to date, or the majority of their working life to date, has been spent primarily paying off a mortgage that isn't going away. Yes, okay, the capital gain might be there, but that's irrelevant if you're living in the house. It's not going to change the way you live your life if you've still got this mortgage to pay off.
What are you going to do? Sell a bedroom to live? Like, you can't. That's the problem with property. You can't just sell a bedroom when you need some cash. You need to actually go refi the whole thing, or you need to go sell the whole thing and scale down. How many people do you know that have lived their entire life, raised good children, et cetera, and are now downsizing later on in their life?
Oh, everyone's parents.
You should be upsizing in the later part of your life, because that's the celebration of your life. You should be upsizing, making space for more grandchildren, et cetera. That's what people should be doing, but they're not, because the fiat system incentivizes people to shrivel up and die, and that's what Bitcoin fights against.
Wow, totally agree. I mean, the downsizing argument, I guess the average person, my mum being one, and my partner's parents the same, the argument for that would be, well, there's only us, and mobility wise, like I've said to my mum several times, just stay in an apartment, you don't need much space, it's more to clean. But realistically, if the system was to enjoy the fruits of your labor when you retire, get a bloody cleaner.
Right.
If your money had held its value and you'd accumulated and you'd built businesses, or you'd built income streams, or you'd invested and, like you said, done everything right, then you should have the income at that point, if you've done everything right, tick box, to afford to be looked after. And like you say, you know,
Exactly.
the meaning of life of having your grandchildren, that's huge. Huge one. I'd never thought of it that way, but that's a really good point. Not necessarily upsizing your house, but upsizing your life, your happiness,
Right.
the
Right.
richness of your life, because you now have grandchildren, you know?
Right.
Yeah.
That's exactly what people should be focused on. But you're not, because the fiat, everything is downstream of the money, right?
Yeah.
That's something American Hollow said once, which stayed in my mind. Everything is downstream of the money. And when you understand that the system itself is designed to create incentives for you to shrivel up and die, you have to realize that you have to fight against that. The problem is, here's the issue. People have been fighting against that, and they've been sold the wrong path.
Yeah.
That's what's heartbreaking. Like, you mean to tell me you did everything right and you still get screwed? Not only by your taxes. So hold on, you got to go and exchange your energy for currency, right? That's what people do when they go work. They go and exchange their energy, and they get back a representation of that energy, which is, you know, pounds, dollars, euros, etc., etc. Like it's you get back that currency. You then take that currency and realize, I'm not one of the stupid ones, so I'm not going to go and splurge out on pointless holidays and Louis Vuitton bags. I'm going to go and put it into property, because that's what I was told. So that property now becomes a battery, right? Because it's storing that energy.
Very good.
Now,
Yep.
you've done that thing, which is the absolute right thing to do, except 20 years down the line, 30 years down the line, 40 years down the line, they've taken that battery that had a capacity of this much and just gone, oh no, the capacity is now this much. But you've still only got this much of it filled. So now the energy that you have is worth less as a percentage of the overall battery size. That's the problem with all of these other assets. Governments can control how much of that asset is made. Governments control how much of that asset is bought. That's with gold, real estate, silver, everything. Equities, everything. If I want to incentivize a stock market boom, all I've got to do is create a tax incentive. And I can inspire a stock market boom, right? Or a new company formation boom. If I want to incentivize real estate being built, all I've got to do is issue more permits. Or if I want real estate to be stop being built, all I've got to do is take away permits. Or I've got to do what they're doing right now, which is increase the interest rates. So now people don't want to buy as much property, so less will be built. Everything is completely in the control of the central planning authority. Everyone thinks only China is doing central planning, right? It doesn't work like that. Your tax incentives are the central planning mechanism that the governments use nowadays. Bitcoin is the only asset that humanity has ever experienced where the supply lever, there's two levers, demand and supply. In Bitcoin, the supply lever is jammed. It cannot move. No matter what happens to the demand lever, the supply lever is jammed. It's 21 million full issuance. That's it. It's the first time in human history where we have experienced an asset like this. Like, for example, when your mom was younger, when my dad was younger and he came over to the UK, he could buy 10 properties, right? I can grow up 30, 40 years later, still buy 10 properties. They might not be in the same area. They might not be the same type of property. I can still buy 10 properties.
Yeah.
Bitcoin is the first time in human history where my children growing up will never be able to buy 1 Bitcoin or 10 Bitcoin or 100 Bitcoins. They will never, ever be able to do it outside of the miraculous. And so their choices 40 years in the future, my legacy's choices 40 years in the future are on my shoulders today. That's what responsibility is about. And that's what the fiat system incentivizes against. If we have that, we have a normal society. We don't have a society that's going crazy like it is nowadays. Because people have that responsibility on their shoulders. That responsibility has been shifted because of credit markets and government manipulation of the supply on assets. So that's why Bitcoin is important.
Well said. It's true. I'm trying to think of everything you just said there to unpack the bits that hit me most. But I think the legacy part, and I guess another way of saying that is time horizon. It's just that people don't, I think it's just, people are, the byproduct of everything you've just described is the vicious circle. People don't know where to start looking at this. And I sometimes struggle to know where to start explaining it. But the byproduct of that system is that everyone's living paycheck to paycheck with the head down. My neighbour, I keep referring to my neighbour in this story. This conversation I had with him recently. He's a plumber, his own business. He had 5 years left on his mortgage, or he sat down with his financial advisor and were reassured that by the time his kids started high school, he'd be mortgage free and could cut back his hours. Following COVID, they've sat down. He's now got 14 years, and it comes back to the energy thing. As far as I'm concerned, that's now just busted his plan to be at home more when his kids are at high school. So it's stolen his energy, as it were, from the future. Yep. But he said as well in that conversation, we stood for about 2 hours talking, and I wasn't trying to orange pill him, but I told him to start learning about Bitcoin. His attitude was, I don't have the time or I hate money. He kept saying, I hate money because I don't have the time to think about it. All it does is cause stress, and I'm working as hard as I can already. And I'm like, that right there is a perfect example of the average person, whether they've got their own business or not, and not realizing what the problem is. And because they're so resentful about the problem, they're not interested in studying the root cause. So it's like, how do we as Bitcoiners or people creating content or having conversations, like how do we really cut to the wake up when people just don't even have the headspace or energy to want to understand the root problem, but they're so unhappy and stressed with what that problem is causing?
It's difficult, which is why for me, I focus on people with a problem. Right? Like if you've got a £5 million property portfolio, I can actually show you why that property portfolio should actually be worth £9 million in order to make up for the amount of pounds that have been printed. I can show you that on a chart. Right? Somebody who's living paycheck to paycheck. That's why I said rich people need Bitcoin more than poor people, but poor people need Bitcoin adoption more than rich people. Because what that person actually needs is his paycheck in Bitcoin, he needs a savings account in Bitcoin, or he needs, the Australian dollar covered by Bitcoin, right? And that way it's just working for him, or he's got an investment advisor that's putting his assets into Bitcoin and it's just working for him, which is why this ETF is very, very, very important.
So what I hear in you saying poor people need Bitcoin adoption, that's kind of what Jeff Booth talks about in Price of Tomorrow and this parallel system. I think what you mean by that is just people need to just completely opt out, right? It's adoption means people are actually using Bitcoin as money, which personally I think is probably further down the track, but it has to start at least with people seeing it as a store of value first and then eventually adopting it as money.
Yeah, I don't think that Bitcoin is, again, I would love to be proven wrong, but I don't think that Bitcoin ever gets used as the
medium of
majority medium of exchange in the entire world. Like I don't think 85% of the world transacts on Bitcoin. Maybe in 100 years, who knows?
That's
but
what I meant.
I don't. I don't know. I just can't see it, and I think it would be ineffective.
Why do you think that?
I think that you need second and third level rails. So what I do like the idea of is if you had a third layer on top of Bitcoin that was the US dollar rail, right? And you had the US dollar on top of Bitcoin, that starts to make sense now. Something like that starts to make sense. But I don't think that Bitcoin is designed to be the base layer asset, and base layer assets move slowly. That's the point of them. Like, that's why I don't really get involved too much in the conversation around Bitcoin's use as a instant transaction tool. Firstly, I think you're a moron if you're spending your Bitcoin. Like, if someone convinced you to buy a fucking piece of art and hand over the scarcest asset humanity has ever created, and you're going to hand that over because you want to take part in the transaction, orgy, like, I think that's a moron. The one thing people should be doing right now is holding on to their Bitcoin, no matter what.
So how do you explain that? I try and go back to someone who isn't a Bitcoiner listening to this. So you just also said we need Bitcoin adoption. How does the adoption happen more broadly if people aren't willing to spend? And how do people that don't yet have it, how do people that don't yet have it acquire it if they can't buy it because there's none left to buy? How do people have got to sell something or work for it, right? Yeah.
So you said that the person that you were talking to, your neighbor, right? He was talking to his financial advisor, correct?
Yeah.
And what was he invested in?
It was just about his mortgage, how much they had left on their mortgage on the house they live in.
Right. Okay. Well, most people have financial advisors. Most people who work jobs have financial advisors, right? The problem with financial advisors is they've been equipped with very, very bad assets. So financial advisors have good intentions because they get paid. A lot of them are broke
as well.
Sure, but they get paid. They get paid by making you money, right? Yeah. But the fiat system has worked in a way where it's incentivized them to just keep searching for more people rather than serving the people that they have. Whereas if they had Bitcoin as a part of their offering, they could make money by making you more money, right? It now starts turning into sort of like insurance sales rather than financial advice. And so that is the way adoption happens without people knowing about it. Because do you know how many people know how treasury bills work?
No, I haven't got a clue.
Not that many. Not that many.
No.
Do you know that most people that have their money tied up in a 401k have treasury bills?
So that's the American version of like a superannuation or pension fund, right?
Yeah. So it's like, that's how adoption grows, right? Adoption grows because Larry Fink stands up, realizes he's been a moron for a while, and then says, we're going to apply, BlackRock is applying for a Bitcoin ETF. And now the army of salespeople for the iShares product that they have now turn into the salespeople for Bitcoin. And people like your neighbor goes to them and says, I have a bunch of money, what do I put it in? And they create a portfolio for them, and part of it's Bitcoin, and they don't even know about it. That's how adoption grows. I firmly think that the idea of Bitcoin awareness and the importance of Bitcoin awareness for Bitcoin adoption is about to go down. And I know that that sounds crazy, but we're entering a new world now. Most assets are not bearer assets. Even your neighbor's property, while he has a mortgage on it, it's not a bearer instrument. Right?
So quickly, I've heard Jack Mallers say that a lot, the bearer instrument. How would you explain what a bearer instrument is? Because I mean, I certainly don't know how to explain that. I know kind of in context what he's saying. Explain.
That is a bearer instrument. That's a bearer instrument. That's a watch, right?
Yep.
That's a bearer instrument. I paid this watch retails for $12,000. I paid $26,000 for it. It's now worth roughly $60,000 to $75,000. That's a bearer instrument. Why? Because I have it. I'm in complete control of it.
So it's something you own.
Something you control.
Something you control. Okay.
Right. Something you control. That's a bearer instrument. And so
you are the bearer of the instrument. I got it. Right.
Exactly. Yeah. Exactly.
Okay.
So that's how bearer instruments work. No, not many assets are bearer instruments. Yeah. Not many big market cap assets are bearer instruments. Yeah. Most property is probably the only one that is a big asset that could be a bearer instrument, and yet every single year it gets more and more financialized as people take loans out against their property, right? And so most assets are not bearer instruments, and yet they're fully adopted, right? You don't go to a seminar on the idea of what is a property, right? You might go to a seminar on, okay, how do I make money from this? But you don't go to a seminar on what is the stock market, right? You're not doing that anymore. That is what will happen with Bitcoin, in my opinion.
So you think awareness will go down because there's institutions doing it for them, doing it for people. Jack is building.
Jack is building the perfect product to explain what I'm saying. Right?
Strike.
He is allowing you to look at your J.P. Morgan Chase account in the U.S. and look at your Barclays account in the U.K. And want to send a payment from J.P. Morgan in the U.S. in dollars and want to credit it in pounds
in my Barclays account in the UK. Cool, I press one button. That JP Morgan account gets debited, it gets converted to Bitcoin, gets sent over, gets converted again into pounds, and credited into my account. That in the middle, the only reason people are excited about it right now is because it's new, right? JP Morgan does that every single fucking day for trillions of dollars, and no one thinks about it. That is where Bitcoin is headed. That is a $5 trillion a day market. That is what Jack is building for, and that is what eventually someone will acquire from him and will implement across the entire network, and it will become bigger than Visa, MasterCard, etc., etc. That's the power of it, and nobody will know.
Yeah. So you think, just going back to what you said about, you think awareness of Bitcoin, I keep coming back to that because it hit me. Awareness of Bitcoin, i.e. people searching for what it is, people taking an interest to buy, will go down because they
will
can
become
do
less
it,
important. Yeah.
because they can do it through the likes of what they're used to, right? The ways they've always invested, through their advisor, through JP Morgan, through an ETF, through index fund, for those who have been doing it already. And that will, for some reason, feel safer and more normal and less scary because it's, again, what they're used
Not for
to
some
in
reason.
their head.
Not for some reason. It is.
Yeah.
It is. For the average person, it is. For someone who's tech savvy, someone who understands, the technical side of Bitcoin, that's people should take the opportunity, I believe, to actually bearer hold the first asset that is actually a bearer instrument, right? At mass scale. They should. But for most people, it's much easier to do the other thing. And I believe banks will create incentives for you to hold the ETF over the Bitcoin. Because if you want to borrow against your Bitcoin, which everyone likes to talk about since Saylor started talking about it, right? If you want to borrow against your Bitcoin, it's much safer for an institution like Goldman Sachs to give you a loan against your BlackRock Bitcoin ETF than your Bitcoin in your cold storage wallet.
So then we're just recreating the fiat system through these institutions if people don't hold the asset themselves. Is that what you're saying? Because these companies can just
We're not recreating it. I
Okay.
think Michael Saylor said this the best in a recent interview. Bitcoin will heal those financial systems. Financial systems aren't bad. Financial systems have created the rails for capitalism.
True.
The problem is that the rails themselves, the financial system itself has been corrupted. Bitcoin can heal that.
Yes.
When somebody goes in and this is the problem. So everyone says, there's a big hoopla, and I was a part of it as well, saying that institutions were going to come to Bitcoin and dump their balance sheet into Bitcoin. I'm sure you've heard that, right?
Oh, it's not so much now, but a lot of it's been talked about for years, waiting for the ETF. Yeah.
After I thought about it, I was like, this doesn't make any sense whatsoever, and I'll break it down why. If Apple was to take their treasury and their cash balances and put them into Bitcoin, because they said Bitcoin will give you a better return, right? As an Apple stock investor, it makes me go, oh, you've run out of ideas. Because the only reason I'm investing in Apple is for you to create products that will sell into the world to generate me profits. If all you're going to do is invest in Bitcoin, I can just sell my Apple stock, or you give me a damn dividend, and I can take that dividend and put it into the BlackRock Bitcoin ETF. Why do I need to create 3 layers of risk extra on top of my investment? So that's why I think MicroStrategy is a very, very special moment. And I don't think it will happen again. I think it's a one and done, and I think Michael Saylor is a genius, and I think he has seen the light like nobody else had, and I don't think it will happen again.
Yeah, I guess I don't understand the stock market's intricate details or treasuries for businesses as much as I possibly should at this point. But going back to what you said, if we not dumb it down, but get into layman's terms.
Let me make it more simpler, right? Imagine you've got some cash. Imagine you've got some cash, right?
Yes.
And I tell you, hey, give me your cash. I'm going to work on a business opportunity. And you go, okay, cool. I trust him. I'm going to give him some cash to work on a business opportunity.
Yep.
And then you realize that what I'm doing, instead of working on the business opportunity, is just holding Bitcoin, but charging you a fee to do it and extra risk because I now control the Bitcoin.
Yes.
Wouldn't you just say, give me my damn money back? I can hold the Bitcoin myself.
Yes. So you're suggesting that the products and services is the important part, because that's proper
Yes.
capitalism without the crony involvement of governments debasing the money. Got it.
It's
And I think
governments,
that's what
it's institutions, it's everything.
I think that's what, with the stock market, a lot of people just don't. They'll either invest through an advisor who then invests in an ETF, and like you say, just adds their markup on it to do so when it's not necessary. It's far cheaper to just do it yourself on autopilot with an auto deposit from your bank or whatever, electronically through an ETF. I think what a lot of people don't actually think about as well, and you might be able to articulate this better than me, is that a light bulb moment I had with stocks is just when you look at and understanding what the term market cap meant, which was essentially how many shares multiplied by the price of the share is the market cap of the company, right?
Mm-hmm.
And then
Yep.
you look at some of the valuations of these market caps of Apple, and I don't know what theirs is at the moment, and it's like 10 years worth of revenue based on what they're generating right now. And I just thought, even without understanding anything more than that, that feels fundamentally a bit off, because they could screw up their next launch, or someone could find something out about the brand that destroys them. And this market cap is just this figure based on enough people believing in the thing. And a lot of people might say that about Bitcoin. It's like its value is only based on the number of people. It's not. Its value is based on supply and demand of it being a worthwhile thing.
Yeah, so the irrationality of Apple's market cap, I can understand it, but I don't agree with it. Right?
Right.
I don't agree
Agreed.
with your perspective. I don't agree with your perspective of it.
Okay.
What I say is that with the financial system that we've got, the fiat financial system that we've got, we incentivize a pursuit for growth over value.
Yeah.
Which is why
Which is what
a lot
results
of
in
a
that.
lot of what I like to call value bros did really well over the last couple years, but now their day has come to an end and they can go back to bed for another 15 years. When you are in an environment where you are printing money at a rate that has never been seen before, you cannot rely on that money being printed to translate into value. You have to rely on growth. And so investors will always pursue growth. That's why the NASDAQ has outperformed the S&P and will continue to outperform the S&P over the next 20, 30 years, whatever it's going to be. You know, the S&P, when you look at it, it hasn't even broken. So one video that I have, which a lot of people get shocked by, is want to stay poor, buy stocks, real estate, and gold. Because when you value the S&P 500 in the amount of money that's been printed, not dollars, but the amount of money that's been printed,
Okay.
not in the price of it, right? What you realize is that the high in terms of value, because that's real value, right? Like, how many shares do I own compared to the amount of money that's been printed? And therefore, if a total amount of money that's been printed is $100 bills and I control 10 of them, I own 10% of the total money supply. That's real value, right? But what happens is that they'll say, right, we're going to increase the money supply by $900 more and increase it to 1,000 and give you 10 more. So now, instead of owning 10% of that money supply, you own $20 out of 1,000. So you own 2%.
Yeah. And that's
0.2%. So-
probably the simplest explanation I've heard. Take away
Yeah.
the stock market. I mean, at the end of the day, people are investing in the stock market or investing in anything because they know that simply holding the money they earn is not good enough.
They're relying
that's
on
what
it.
it all comes down to.
Right. They're relying
They might not
on
know
it to be
why, but they know
right.
that.
They're relying on it to be a battery, right? Like your
Yeah.
choice as an individual is you work, earn currency, earn energy. You convert your physical energy into currency and then want to put that into a battery, right?
Yeah.
And that battery is being devalued. And by devaluing a battery, if for imagery terms, it's like if a battery has 100% capacity and you own 10% of that capacity, and suddenly the battery's capacity doubles to 200%, you're fucked, right?
That's what you said
That's
before,
really
yeah.
that's really the problem that's going on. So most people don't realize is the S&P in terms of value is not even at its 2000 high, the tech bubble high. It's barely broken. So forget the amount of dollars it's gone up by. In terms of value, it's not even past its 2008 high.
As a percentage of the money supply. Yes,
As
I
a
get what you're
percentage of the
saying.
money
Yeah.
supply. But in
Okay.
dollars, everyone looks like they're balling until inflation
that-
catches up to you.
Yeah, and I think, I mean, I don't know every person in my audience, but I think a lot of people listening to this probably you would have lost them even at S&P, because I think just a lot of people aren't even in a position to keep investing at the moment beyond paying their mortgage. So they perhaps haven't even got to a point where they realize how that works, the level of financial literacy beyond work, earn, pay mortgage, because then it will be clear by the time you're 60, if you live that long. That's what I'm finding. And a lot of these conversations just lose people before they've even had chance to realize what the problem is. But essentially all you're saying is it comes down to money supply. If we're using something as money, its value is based on how much of it we have, not how much of it can be centrally inflated by a government who goes, oh, we need more, pump some more in. Which if you explain that in supply and demand of anything else, which is
Makes
why
sense.
I think you've talked about art before. It's like, if you've got a Mona Lisa, the Mona Lisa, there is one. That's why it's worth a fortune, or probably will never be sold. But people understand it with everything else except money itself.
Exactly. And what most people have been fooled into believing is that most people think inflation is the enemy. Inflation's not the enemy.
No.
Debasement is the enemy, and that's what if anyone takes anything away from this, is understanding that inflation is not your enemy, because the inflation number is easily manipulatable. The debasement number isn't. Like, we literally printed this many dollars this year. You can't lie about that. Whereas I can lie and make you think that inflation is better or worse depending on how I want you to react.
Personally, just to tie that into your money supply conversation, and then we'll move on, is the fact that it's not that inflation's the enemy. I think it is. I think it's theft. I'm very much on the Robert Breedlove stealing your energy argument, because if money was sound, we wouldn't need inflation. I think the enemy is people's misunderstanding of inflation. And I have so many friends my age who have been doing everything right, like we said, investing, doing their best, spending all their spare time learning all this crap, which you shouldn't have to spend all your spare time doing. Their understanding of inflation is flawed, because it's the money supply that gets inflated. We don't need prices. Yeah, exactly. But it's overcomplicating it to call it inflation's over here and debasement's over here. They're the same freaking thing.
No, they're not. They're not though.
By virtue of inflating the money supply, it gets debased. I guess that's my understanding.
Well, inflation in economics throughout every education system is determined by prices, right? It's price inflation. That's how people understand inflation.
Yes.
Right? When you say inflation, they just think prices. So that's why I say debasement and inflation. You separate it so people go, oh shit, there's two of them.
I think just separating it adds a layer of complexity to me, or it did. I just didn't have any interest in learning more jargon than I needed to. Whereas if you just start with inflating the money supply, you've just created more of something, therefore it's less valuable. In real simple terms, because the minute you then get into the economics and the Ray Dalio stuff, it's like, I'm lost.
Well, if you want to get into the Ray Dalio stuff, you have to believe that China's the up and coming reigning superpower that's going to
let's not go there. That's a bit scary. Let's switch gears quickly before we start wrapping up to your journey as a creator, as someone who, so you've discovered Bitcoin, you've discovered this thing that you're super passionate about, and you've made money, you're successful, and you've decided you're going to throw yourself into that brand, British Hodl. You'd already built a following, and then you unveiled your face, and it was all you were. A lot of people in Bitcoin are anonymous or using alternative names. But what did that look like? Like, how did you intentionally start building a following, or was it just as a result of starting to talk about it? When did you start, and how?
It was Clubhouse mainly to start with, and then Twitter. And then Twitter and Clubhouse. And I don't know, but if I had to guess, then I would say people were attracted to the idea of someone who was in traditional assets before.
Okay.
Who is now come into Bitcoin and is able to have that conversation on that level rather than sitting in a t-shirt, shorts, and flip-flops. talking about how we're going to change the entire world, right? Like, I think that the familiarity of my story for a lot of people made a lot of sense. And also, you know, just admitting it's okay to admit that you want to get rich, which was my message when I first came in. It was like, you don't have to pretend to be a hippie. Like, you can say you want to get into Bitcoin to get rich so you can affect your message onto the world. That's okay. Because if you're not rich, you are not going to be able to affect your message onto the world.
Yeah. Yeah, very true. That's something that led me to rename my brand. I mean, I'd been doing a lot of affiliate marketing, and I did that because I wanted to make money. And I wanted to make money, not so much make exponential amounts, but I wanted to make it in a way that gave me freedom to move geographically, and the freedom to scale it, and the freedom of my time, which is essentially coming back to the energy conversation. That was why I started online. But the BU get paid piece, for me,
which is a great brand, by the way.
Oh, thank you. Well, it was going back to what you just said, though. What you just said was so spot on as far as I'm concerned with my brand. Is it's okay to admit you want more. It's okay to admit you want more, and that doesn't always look like more money, but money is going to help you get more of everything else. The one thing it cannot buy you is your health. But again, I've kind of said to everybody before, or anyone I speak to, it's like, challenge me on something money doesn't make better or easier. Because even if you've got terminal illness, you can certainly buy more comfort. You can buy, you know, that. And
you can buy a better experience.
You can buy a better experience, which is what life's all about. When we are finite, we have limited time, and it's getting people to admit that. And I think you do it, and you do it very differently to me. But you know, you mentioned your arrogance as a 16-year-old, or what you thought people would have thought of as arrogance. I can imagine you're not much different now than you were when you were 16, and that's rare.
Now I've got a little bit more finesse, and probably a little bit more successes to rely on, rather than just pure brute force arrogance. So
I don't
it's
see
like,
it as arrogance. I
I
know
feel
why
like
you think people would.
I feel like life is a journey of turning arrogance into confidence, right? In a weird way. Like, that's what life is about. Like, life is about believing in yourself and what God put you on this earth for, and then spending your life proving that. That's what life is about.
Yeah. And whether it's God, the universe, whatever we call it, and that's a huge point as well. Like, whatever your God, your spirit, your universe, whatever you believe doesn't matter. Like, you are you. One thing we all have in common is being human, and one thing we all have in common is needing money. And that's what blows my mind with the Bitcoin community. They get that. Like, and it's the first community I've been in where people really can have divided views, divided opinions, and still sit down together and have amazing conversations, which is, I think, the thing I love about it most, because that's a core pillar of what I'm trying to achieve with BU Get Paid. On the BU side, you know, don't be afraid to put yourself out there, because we need all the voices, we need all the opinions, we need all the individuals, because that's what the world is made up of. And the get paid part is just actually question what money is. It's okay to want more of it. Understand why we have it in the first place, and stop just buying into the traditional BS conditioning that you've been told for so long, because that is why so many people are struggling or not getting ahead to where, with all the hard work in the world, they're not getting ahead.
But you know why?
So
You know why that is
great
with
advice.
the Bitcoin community, right? Like, the difference. What I love about the Bitcoin community is that there is no asymmetry of information. All information is symmetrical. The only asymmetrical piece of information between you and I is the price at which we buy. Like, for example, that building behind me, right? Like, let's say we were both in property and we were both looking at buying that building. If I knew something about that building that would give me an advantage in negotiating that building, that deal, I can't tell you about it, because now you have that advantage and now I no longer have that advantage. So I need to hide it from you. Whereas with Bitcoin, I can tell you all the advantages of that. The only differential factor that me and you will have is what price did we buy at. It's the only asset where all information is completely available at all times
And transparent. Yeah.
and transparent. It's the only
Yeah.
asset, and that's magical. That's never ever happened in human history.
And every conversation I've had, it comes back to that being one of the value systems, right? It's, imagine if people were like that, if you could actually just see and verify who they were rather than having to trust what they say. You know, there's the verify, don't trust.
Bitcoin allows you to see, you know, the best possible version of a human that I believe God put us on this earth to be, because it protects your value.
Yeah. Literally, as well as spiritually, physically, in all the ways. Oh, I love that. Let's finish on that, because that is such a great point. Actually, no, let's not finish on that. The last thing I try and incorporate, sometimes we have this conversation, then it goes on for another half an hour, but I'll finish with these two questions. So going back to, I don't know, maybe your 16-year-old self, but a younger version of you, what advice would you give him on being you and getting paid? So knowing yourself and knowing money. What would your two little nuggets of wisdom you would give a younger version of British Hoddle?
I'd probably tell him that the cheat code is keeping the money, not making it.
Agreed.
Making it's very important, but the cheat code is actually like keeping it.
Knowing what to do with it, yeah.
And now everyone has Bitcoin as a cheat code, right? Because up till now, you would go work, you would go sacrifice your energy, you'd go sacrifice your time away from your family, your children, your husband, your wife, and you would go put yourself at risk in your career, you would increase your stress, you'd do all this other stuff. Now you're earning money finally, and now you need to save up in order to buy a house, right? Let's say you got to save up to buy a deposit, to put a deposit down on a house. Well, you save up to put a deposit down on a house. By the time you save up for it, the value of the house has gone up and the value of the deposit has gone down, right? With Bitcoin, it's the first time that a multi-billionaire or a person sweeping the streets can buy the exact same asset with maybe 1% of a difference in acquisition cost, right?
Yeah.
Whereas if I want to buy gold, like let's say I want to buy gold right now, a multi-billionaire is going to get a much better price than me, because he's going to buy a larger quantity, therefore they need to melt it down less, therefore he gets the economies of scale on that. And I am going to get a much better price than the street sweeper. The street sweeper is going to hand over $50 and get back $25 worth of actual gold, which means for the street sweeper, the gold actually has to increase in value by 100% for them to just break even on the gold. So gold is a terrible savings tool for the poor, right?
Yeah.
Bitcoin, we're all going to buy it, and the multi-billionaire might get a cost of acquisition of 1.5%. I might get a cost of acquisition of 2%, and a street sweeper might get a cost of acquisition of 3%. That's the first time ever that that's happened. So you can actually use the Bitcoin cheat code and understand that protecting your value is easier than ever. So it's about keeping the money, not about making it.
And when you say keeping the money, are you talking about the physical custodying of it that we talk about, holding it yourself, or are you're just talking about the price of acquisition?
I'm just talking about not blowing it on stupid shit. I'm talking about not taking trips to Monaco every single month like I was doing like an idiot, like doing silly shit like that. Like, and the only reason you do that is because the fiat system incentivizes you to do that. You're not gonna. Sorry, after you.
No. I was just going to jump in at that point because I was hoping you were going. Go back, please carry on afterwards. But I just wanted to jump in because you've answered the money piece, the get paid piece, and what you were about to say is evidence to me of why it's so important to have the BU piece, because we do spend all our money on stupid shit when we're younger because we haven't figured ourselves out.
Right. Absolutely.
So what would you say to yourself about that? What would you say about figure out who you are? Like, what in that bucket of advice? What would you say?
I would say if you're going to get some vices, make them vices that go up in value. Like, I like watches. I don't like cars.
Okay.
I've never been a car guy, right? I like watches.
Yeah.
So if I'm going to put if I'm gonna go and, if I've got 30 grand in the bank and I'm starting a business, it makes complete sense for me to say, okay, I'm gonna put 10 grand of that into a Rolex. Because
Okay.
believe it or not, whether anyone wants to believe it or not, that Rolex is going to help you close more business deals. Just
That's
is.
fair. Yep. No, I agree.
So,
I guess
so
it was
I,
more. Go on. Sorry.
Yeah, and to me, all of these things are savings tools, right? Like, so
Mm-hmm.
all of my advice. Listen, to say that someone who is a young person making a bunch of money isn't gonna go spunk some of it up the wall, it's just unrealistic. You are.
Yep.
You just are, right? So you just got to
Yep.
be smart about how you do it. Just like, I mean, I was
I
being
see what you mean.
crazy ridiculous how I was doing it. There was a time where a mentor of mine rang me because I sent him a picture of me pouring a bottle of Dom Perignon champagne off the balcony of the Fairmont Hotel in Monaco 2 hours before a flight home. And he said, when you get back, go take a shower and come and see me. Right, like that was it. That was the voice note that was the phone call that came through. So
Yep.
avoid doing it like that. But to say avoid taking trips to
Yeah,
expand
yeah,
your
yeah.
mind to that's unrealistic, and I think people should live life. At the end of the day, I always say on Twitter every now and then, like, yeah, there's 21 million Bitcoin, but you've got one life. So your
Exactly.
life is much rarer than any Bitcoin or any property or any stocks or anything that you could do. You have to live it.
There you go. And that is where we'll wrap up. Except I have to know what he said to you when you got back. When he said, "Take a shower and come and see me." What did he say?
It was a bollocking that I will not repeat, but
I figured it
it
would
was,
be. How dare you
yeah,
pour Dom Perignon over the balcony, you absolute tool.
yeah. He basically, in essence, he basically told me if I ever did that again, I could lose his number.
So what do you think he was trying to say? Like, have a bit more respect for money?
Yeah, he's like, you
Yeah.
need to have respect for money. You need to have respect for the opportunity you have at under 20
Hmm.
years old for doing what you're
Yeah.
doing while other people are doing what they're doing. You have money, therefore it means you have responsibility. And that's where, my life has gone. It's like,
Mm.
I understand I have a responsibility because I have resources. Like,
Yeah.
it
Yeah.
every if it, no most people don't think like that nowadays because the system
No.
incentivizes you to make money and then be irresponsible because irresponsibility is cool. Bitcoin finally makes responsibility cool, and that's what it's
Oh,
about.
there you go. Right. So the key takeaways I'm taking from this. Open your mind. Stop thinking the way everybody else is. That was one of the first things you said. Be responsible. And Bitcoin teaches you that. Bitcoin teaches us everything. I think we're summarizing with here. Have
You know the
respect
other
for the money.
you asked me for two things that I would
Yeah,
tell
yeah.
my 18-year-old self. Like,
Let's have it.
the other thing is not money related. It is
Great.
this is I don't know how this is gonna sound, but this is exactly what I would tell my younger self.
Hmm.
Believe that something put you here for a reason, because it's easy to fall into the trap of I don't believe in anything and I don't know what I'm here for. But if you just have that initial little candle of something put me here. I was reading a study and it said that any human being, there is an average 1 in 400 trillion chance of you being born as you. You being born as Amy, that's a 1 in 400 trillion chance.
Yeah.
So something did that. Whether you want to believe it's God, whether you want to believe it's the universe, whatever you want to believe, something did that.
Hmm.
And I think having a knowing in the fact that something did that and you should be grateful for that would probably have put me earlier on a better path than it did.
Yeah. I agree.
Yeah.
It's I've heard that Gary Vaynerchuk talk about that a lot, and yeah, unfortunately, once we are in human form with thoughts and minds and brains that are going too quick for our own bodies, I think we just get in our own way.
Well, it's also the
So
people
yeah,
around us. It's also the people around you, right? Like I just
yeah,
put a video out today and it was about, how many people around you. Do you know how many people have told me that I was wrong about doing something that I was doing to improve not only my life, but their life. Like people telling me that I'm wrong for investing in real estate or getting involved in stocks or Bitcoin. The amount of people I've had to fight against to tell them that I'm right is huge. And so many people are suffering in complete silence with nobody around them believing in them. That's huge. You have to have that belief. You have to have a group of people around you. You have to have a mastermind around you. You have to have a gang of people around you that not only, I'm not saying are yes men, that's not what I'm talking about, that believe in you. That believe in you, that allow you to have conversations that might stretch, the fabric of most people's ability to think so that you can actually grow as a person. That's very, very important.
Yeah. Amen. We really will wrap it up there. That was awesome. Thank you so much.
Very
Where
welcome.
can
Thank
people
you so much
find
for
you?
having me.
No, you're more than welcome. Been great to connect. Where can people
Just
find you?
listen, it's very simple. Go to YouTube and in the search bar type in British Hodl and look for this mug and you will you'll find me.
Awesome. And I'll link up you've got a book, haven't you? You've got an email list if people want to connect with you, read your book.
Yeah.
Yeah.
Yeah, the book's
Awesome,
not out
because-
yet, but I did do a training, and I recorded this training, right? And it's called the $5 million Bitcoin because
Yeah.
that's where I think Bitcoin starts at. And I recorded this training basically for somebody like my parents. It's basically
Yeah.
the same training that I put my parents through, and it's
Cool, I
completely
sent it to
free.
my mum.
Yeah, it's completely free, and if you go to any of my YouTube videos in the description, the link to the free training is there.
Awesome. I will link it up. Thank you so much again. We
Very
will
welcome.
talk and tweet soon.
All right, thank you very much for having me.
Hello, my friend. As someone who's not the best at finishing the things they start, thank you so much for making it to the end of this podcast. I hope you found it helpful. Maybe it piqued your curiosity on something new or even just made you smile for a few seconds. If any of those things apply here, then all my regular tech challenges and tantrums are well worth it to get this to you. If you heard anything at all that you think could help just even one other human being, there's a couple of things you can do that I would really and truly appreciate. Firstly, you can follow or subscribe wherever you're listening. On most podcast platforms, this is usually just a case of hitting a follow button or a plus sign on the main show page. This means you'll never miss an episode, which is hopefully a win-win for us both. Secondly, if you're feeling really generous, you can leave me a 5-star rating or review wherever you're listening. And lastly, feel free to share an episode with a friend on social media with any thoughts, feedback, suggestions, or even criticism. It's okay, I can take it. Just tag me using the handle @AmyTaylorSays to make sure I see it and can thank you personally. Any or all of these things genuinely mean more human beings see and hear these conversations. So again, thank you for being here and helping me with my mission with BU Get Paid to help as many people as possible know themselves, know money, and be happy. See you next time.
It's another one of those mornings where I woke up pretty early and decided to, my brain just got working. So I'm here in my bathrobe again, which is quite interesting because so many of you guys comment, where's the bathrobe? So who knows, maybe I don't need to get dressed anymore for doing these videos. So listen, today I want to talk about something that's quite interesting. It's going to be interesting moon boy math that we're going to do right now. However, I think on the grand scheme of things, it could be less moon boy math than we all think. So while it's going to sound crazy, I want to implore you to come with the mindset that we have never in humanity seen an asset with finality of supply ever before. So I was thinking about it, I was like, well, this ETF is coming at some point, right? There's going to be a GBTC versus the SEC decision. There's going to be the BlackRock ETF. There's going to be something. I think we are going to get a spot Bitcoin ETF by the halving, right? And I think there's a high chance that that could be 2023. So I started wondering what could happen to the price of this asset once you get an ETF, considering it's not an asset where you can just start getting more of it, right? And you've just now unlocked the biggest tap of money that the asset has, which is the ETF. The ETF is the biggest tap of money for Bitcoin. I know there's a lot of people that are talking about, oh no, we need real people to hold Bitcoin and normal people to hold Bitcoin. Cool, you're absolutely right. I'm not talking about anything that $1,000 net worthers think about in my videos, right? There's lots of other great videos for that. Not worried about that. I'm talking about the main capital in the world. Where is that going to move from? How is it going to move? And the most efficient way for it to move is through an ETF. It's also very, very smart for businesses to hold the ETF. It's also very, very smart for high net worth family offices to hold the ETF. There's just less thinking involved with holding an American ETF than anything else. So yes, while everyone's talking about I want all the people of the world to benefit from Bitcoin, I agree with you. That's not my focus. My focus is, when does the capital start moving into Bitcoin? Because a nation with 40 million people all putting in $100 into Bitcoin is cool. What's cooler, what's cooler than that, in terms of getting to the next point, is going to be when someone goes and puts in $400 billion into Bitcoin in one hit, like a sovereign wealth fund or a government or something like that. That's cooler by my focus. There's enough people out there in the world focusing on the 40 million people, put $100 in, et cetera, et cetera. That's why I always say the rich people of the traditional asset class need Bitcoin more than poor people, but poor people need Bitcoin adoption more than rich people, because Bitcoin adoption allows you to start saving your energy, actually allows you to start focusing on, what do I want to do with my spirit? What do I want to do with my time? What do I want to do with my life? And it works as it should, not you having to become a speculator in order to do that. So that part is being taken care of through adoption. But adoption cannot happen until the asset has a lot of capital in it, because it cannot be trusted, right? A government can much more easier trust an asset that has a market cap of $50 trillion than an asset that has a market cap of half a $1 trillion. So that's why I was wondering, like, how quickly can this capital come in, and what effect would that have on the price? And I know a lot of you think about this as well, and that's absolutely fine. There are people who are looking at Bitcoin as a trade. There are people who are looking at Bitcoin as an earth-saving technology. There's lots of different ways to look at Bitcoin, right? So I was thinking about this, and I started to think about, okay, well, Bitcoin's a commodity, so it's more like a commodity, so let me go and have a look at what happened to gold. Because when GLD was approved, what happened to gold? That would give us an idea of what's going to happen to Bitcoin. And gold rallied 350% in the preceding 8 years after GLD was approved. 350%. And Bitcoin will rally harder than gold, right? And there's a few reasons for that. The top 3 reasons in my mind are actual finality of supply. You can't just mine more Bitcoin to match the ETF demand, which is what happened in the gold market, right? As soon as the ETF was approved, suddenly all of this gold mining was approved, right? Because everyone wanted to feed the demand that was coming in from the ETF, and the asset still rallied 350% in the following 8 years. You can't do that with Bitcoin. Right? Number 2, the multiples are tighter. Gold requires roughly $1.6 to $2 billion, according to Bank of America, to move the gold market cap by 1%, because of the supply and demand effects of that. Bitcoin just needs $93 million, according to the same research. Think about that. You need almost 20x less demand going into Bitcoin to move the prior market cap by 1%. And that's today. That's not as more and more hodlers get created. That's not, because think about it, if you've got an asset and you bought it at $10,000 and it's now $1 million, it would be stupid to sell that asset, because you've got a tax event that's going to happen, and especially the buyers that are coming into the market now versus the buyers that have been in the market. And the buyers that are coming in now are much more sophisticated. I'm going to do a video, so please make sure you subscribe if you haven't already, on how I plan to spend my Bitcoin without spending my Bitcoin. So make sure you subscribe to the channel to see that. It's going to be coming up at some point this week. So you've got now people coming into the market who, if Bitcoin goes from 40,000, let's say they got in at 40,000, and it goes to $1 million, they never need to ever sell that Bitcoin ever again. And then when you've got the ETF coming in, it's even easier. It's so easy for me to get a stock loan against my SPY or QQQ position, and that's exactly what will happen to the Bitcoin ETF over the next few years once one is approved. So, and you get favorable interest rates. You're not getting your 11% interest rates right now, which is what you have to pay if you try and borrow against your Bitcoin through one of these, Bitcoin-related companies. Soon enough, you will be able to borrow directly on Interactive Brokers or Charles Schwab or whatever else you use. You'll be able to take a loan against it, and it will be a market rate interest rate, which is what it should be. So, and the only reason they can do that is because they've got the ETF, right? There's no custody issues when it comes to the lender's side. So it becomes advantageous to tell people, hey, if you want to borrow against your Bitcoin, buy the ETF, right? Buy the ETF and borrow against the ETF, not the actual underlying spot Bitcoin, which the ETF, of course, will have to own. And number three, I think that Bitcoin is increasing its adoption rapidly, and it's more and more seen as what it's supposed to be, which is a reserve asset. It's more and more seen as that. It's more and more understood as that. People who are, selling and spending their Bitcoin are being mocked, as they should be. You are telling me that you have finally got your hands on the hardest asset humanity has ever created, and you want to exchange that for a piece of a painting? It doesn't make sense. It doesn't make sense. Spend and replace is about the closest thing that comes to it. But if you're going to spend and replace, why don't you just forego the shit you were going to buy and just add more Bitcoin? Right? That whole local economy thing, it doesn't work for me, especially when you know that the person you're buying the product from is probably going to sell it to pay for their living expenses. So I don't really care about that, right? I don't think that's the right thing to do at this moment in time. You got people with a few $1,000s of Bitcoin being tricked into buying pieces of art or buying mugs or buying whatever the hell else they're buying just for the sake of helping the Bitcoin economy. And you got people with multi-billions of dollars of Bitcoin holding on to every single Satoshi that they can grab. There is a difference in mindset here. So, based on those three things, finality of supply, multiples are tighter, and Bitcoin increasing its adoption rapidly, I think it's safe to say that Bitcoin would rally much harder than gold. So then you have to think about, well, what could the price effect be on Bitcoin? Because think about it, right? If you're watching this video, you're probably thinking about investing in Bitcoin. If you're not thinking about it, then you're all into Bitcoin. It's one or the other. You have to start thinking like an investor, because if you have not invested into Bitcoin yet and you're watching my videos, you're probably someone who has other assets. You're probably someone who's thinking about their future, and you need to evaluate, okay, so what are the chances of Bitcoin going to zero, and what are the chances of Bitcoin going to $1 million? What has a higher likelihood, right? And then you can make an assertion on which direction you go in, what size of allocation you have. And we can safe to say at this point, considering the government regulation that's coming in, considering how supported it is by big finance, all of these things, I think it's safe to say that the chance of Bitcoin going to $1 million is higher than the chance of it going to zero. So the most dangerous position to be in is 0%. So you need to get some Bitcoin, right? However much percentage you get into, we can argue about and debate, but you need to get some. You need to get off zero. So let's think about how hard this could rally once an ETF is approved. If it took $1.6 billion to move gold's market cap by 1%, and it takes Bitcoin just 93 million, I was just thinking, I was like, let me just do some approximate maths here. Or for my American friends, math. This is not a deep dive study. This is just back in the napkin working out what could happen to the market price of Bitcoin, right? So what this means is that Bitcoin could rise by 76 times more over the same period, not taking into account the finality of supply. Why is that? It's very, very simple, right? If Bitcoin has if gold rallied 350%, right, and Bitcoin has a 1 to 118 multiple based on Bank of America study, You just times that gain, and you're looking at 76, right? You multiply the gain, and you're looking at 76 times more over the same period. And I took a cut down on that. So, right, I haven't priced it at the exact multiple that B of A says, because it's crazy and people don't like to believe it. So I've reduced the multiple, and you're looking at 76 times more. So I'm assuming that it goes up percentage-wise the same as gold, and then adding the premium and of the multiple that Bitcoin currently has onto it. So gold went up 350% in 8 years. And if a Bitcoin ETF is approved, let's say the price of Bitcoin is $40,000 when it is approved, that 350% would equal 140,000 over that 8-year window. However, you've got to add in that multiple effect. You got to times that by 76, and then you get $10.6 million per Bitcoin over the same period. If the same amount of capital goes into, or rather, the same gain in terms of percentages happens in Bitcoin, and you know how easy 350% in Bitcoin is, because if you've been looking at, all you got to do is look at any chart. You can see how easy that is, and then add the multiple in, and you're looking at $10.6 million per Bitcoin. When I saw that, I was blown away. This is just the ETF. This is without any countries getting involved, without any high net worth individuals buying and holding in ways that we don't know. This is assuming that a lot stays the same, which it absolutely will not. It will not stay the same, right? And it's also without 20 plus other considerations to Bitcoin supply tightening due to demand not even, due to the demand not even being looked at, right? And I also think that supply constrains further as the price goes up and more financial facilities come up to generate the liquidity without selling. So, if I've put $100,000 into Bitcoin and it's now worth 25 million, it doesn't make sense, and I live in the UK or the US, it doesn't make sense for me to sell that, right? I'm assuming this is in the ETF, right? So I put $100,000 into the Bitcoin ETF. It's now worth 20 million. I'm not going to sell that because I'll have a taxable event. So what I'm going to do is borrow against it. I'll borrow $1 million against it, right? There's no chance of being margin called at this point. There's no chance of none of that. I'll borrow $1 million against it at market interest rates, live off of it, completely tax-free moment and event. And as the price goes up, I pay the loan off with depreciation on the price. It's just very, very simple, right? Just keep refining, refi. So I think that the supply, the supply constrains further as a result of this, because a lot of people think that as the price goes up to $1 million, there's going to be a flood of this Bitcoin hitting the market. Sure, there'll be some people that sell, but there'll be the inexperienced investor who doesn't know how to generate liquidity on an asset that they want to hold. But now you've got the buyers coming in who are experienced and who have the connections to make that happen. So as that goes along and as that Bitcoin turns over from inexperienced investors to experienced investors, the only thing that we can expect is that the supply constrains further. Ultimately, what you realize here is that nobody is truly ready for true scarcity. True scarcity. No one is ready for it. And that's why, part of the reason why I'm doing this YouTube channel, right? Because people like my parents who have been in real estate for so long don't understand that they maybe need to get into a small portion of this asset until I sat down and explained it to them. So this video is designed, and these videos, the ones that I'm doing, are designed for people who are trying to contemplate, okay, well, I own a bunch of real estate, I own a bunch of equities, do I really need to add some Bitcoin into my portfolio? And the answer is yes. But you need to understand why, what the opportunity is, how it could work out. So that's why I always ask, please subscribe to the channel, because the way the YouTube algorithm works, the more subscribers you get, the faster you get the subscribers, the more they're going to show the video to new people that are sitting there melting their value away in their property portfolio, which has not shown a new high since, we've not breached the 2008 value in real estate, in real value. So what I'm going to do here is I'm going to put the link to the tweet in the YouTube description so you can go and look at it and see the math that I spoke through, and understand and revert to it and see if you have any questions about it, and please comment on that. But other than that, everything that I'm looking at here just tells me to follow the 3 rules of Bitcoin, which you guys must know by now if you watch more than one of my videos. The 3 rules of Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy. Have a beautiful morning.